All right. Morning, everybody. Morning, 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 morning. Get started here in a moment. Let some people tune in. Woo, woo, woo. We had CPI come in hotter than expected. PPI today. Give me one moment here. I'm just still in this little trade that I want to get out of. And I'm out of it. Okay, there we go. Oh, I'm not out of it. Holy moly. There, now I'm out of it. What just happened there? All right, there we go. Now I can focus. Anybody trading this
that will give me a lot more
cruddy price action today?
In this run, because
What's up, Derek? What's up, Vin? Chase, Mario, Austin, what's going on? How's everyone doing today? Chilling in some AVGO calls. What's up, Trader Joe? Good morning, man. Kensky. Morning, Andre. Morning, Sparks. Good morning. Good morning, everybody. Hope everyone's doing well. It's a little bit of a late start for me today. Just a lot of chop, though, so I don't think I really missed much. NQ sitting around the highs of day. All right. Where's my Thinkorswim platform? Dude, my whole... Oh, my goodness. Let me get my Thinkorswim up and running. Got some coffee. Oh, man, what a day. What a day. What's up, MyStar? Awesome. How you doing? What's up, Abby? Morning. FRO, SLV. We got a couple names coming in here to pull up some of these tickers. Talk about a wild CPI day. I couldn't go live yesterday, which sucks because it was a volatile day, but I mean, the entire day stuck around the lower daily expected move for the S&P 500, which we had plotted out, which was right here. So this is the S&P 500. Give me a second. S&P 500. The daily expected move was, where was it? I think it was like right here. Yeah, it was like right here yesterday. Now we have a new daily expected move, 518 to the upside, 509 to the downside, and we haven't even came close to tagging those, and we haven't even tagged the weekly expected move yet. Now we have, tomorrow we have earnings, so we get to talk about some of these financials that are going to be reporting earnings. A lot of those charts look really good, but then they've taken a little bit of heat in recent trades, so we'll follow up on some of those, see what those look like. This is what happens. You know, and I feel like we've taken plenty of time to prepare for what it looks like
that Clear Lake had made
in negative gamma territory.
$71 a share.
So remember, in negative gamma territory,
2023 for BLKB.
We're gonna hop pretty much right into it. So we're in negative gamma territory, and we're substantially there below it right now. When we're in negative gamma territory, this is where liquidity dries up. And you get selling into selling, buying into buying. You get much more volatile price swings. It's typically better for day trading. Not today, really. Today's choppy as heck. I got chopped to shreds today. Chopped to shreds. I managed to come back to flat. But it was just, once again, I was like, all right, now I'm done. Up a solid $10 on the day. But this is what happens. You can get these, you can catch very large, substantial moves, but you got to be somewhat aggressive because they can fade very quickly. That's what happens in this negative gamma territory. In negative gamma right now, the flip line is at 52.27. Now, market net flow looks pretty darn good, right? So it was green for the majority of the day here, right? And then it was just choppy. We were kind of floating around above the zero line in both cumulative net premiums for calls and puts. Then we went gray, and when it's gray during the day, there is no edge really. You don't have like a substantial edge. It's you and price action, and that's about it, right? When it's green, it tells us that the market is moving with market net flow. And look at this divergence taking place. This looks pretty positive for the most part, right? Look at the red line's crossing now down below zero. Price action's flat, and the green line's ticking up. I mean, this to me, gosh, am I in a trade right now? I'm not in a trade. I got out of it. Okay. I started my day off today. I started my day off trading these accounts, and I was hooked on. I only had one account. I didn't set the group, so I put what I thought was a very small position on amongst many accounts, all onto one account, and I fried that account, and I didn't realize it, and I was like, okay, well, that sucks. That sucks. There goes one account. Stuff happens. Stuff happens. I did that once, and then I did it again because it's like I clicked on the dang thing and it didn't like load. The second time around actually played out fine, but I fixed it. All resolved. All resolved. People are overstocked. They're buying cocoa. Is cocoa still up? Look, I'm not going to rule out a weekly lower expected move tag still. Market net flow is not suggesting that that's going to be the case today, but we typically, now this weekly expected move we haven't seen since October, right? This size of an expected move, not since October. And that October, like towards the end of the month of October, marked a substantial turning point in the market. Now, I don't know if we're going to be getting a substantial turning point in the market this time around, but we are starting to get a lot more volatility. Okay, so negative gamma territory, and look at, you can see it here. You can see it clear as day. When we're above 52.50, I think that's a better case to be. Where it stands now, it'll change probably by April 19th. April 19th, we have an OPEX. Okay, so if I go to Gamma Lab, I like using their software. I go expiring by strike. No, percent by total, actually. Let me go over here. A little bit of a change. So expiring gamma percent of total, 412. We have some rolling off, like 19%. Let me see by strike. This is expiring this week, so we get a lot more puts expiring this week. So it seems like, you know, a lot more people were reaching for puts this week, which makes sense because we saw a lot of that volatility. Let me see. So 419, this was a lot larger. So it looks like 412, which is tomorrow, will get a decent size. Yeah. So if I go to net gamma, that's not that large of a percentage. So we'll see how kind of that works itself. But if I look over here, you can see there's actually a lot more size being reached out to the put perspective, and our put wall is 5,000. Now I can back in October, I remember this very specifically because I had somebody making fun of me for saying that, or was it actually? Yes, it was October. October, we were talking about 4,200 being that big put wall, right? 4,200 is the big level, and look what happened. It clipped under it, and I remember when it clipped under it for a day and a half, where we said that this could be that level to potentially watch for a U-turn, for level of support. I started getting hit up hecka hard, and this is where I started going much more aggressive in my portfolio, like undercutting and coming up through that area at 4,200, which I've showed. And I just remember people were so quick after 2 days of being down and finally absorbing that put wall, coming down to the put wall. They were just very, very quick to say, you know, oh, see, it's going down further, it's crashing, it's over. Oh, so goes the 4,200, you know, and blah, 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 blah. And then you look back to the left of the screen now in hindsight, and you're like, yeah, dude, see, you should have adjusted, you should have paid attention, because these gamma levels are incredibly important. Why am I bringing that up now? I'm bringing that up now because I don't know if we're going to get to 5,000. I don't. No one knows. But that is the put wall, right? Right. 5,100 is growing in size, but 5,000. So if the market wants to come off another, what, 50 points, 58 points, that's not crazy to me. I mean, look at the trade tab today. We're still pricing in about a $26 move right now. Between now and tomorrow, we're still looking at a $50 expected move when the weekly expected move was 86. So there's still, boom, volatility. Short-term volatility. Okay? Look at the VIX. Look at the VIX. The VIX hasn't even been scathed yet. So volatility from the VIX perspective is high. Implied volatility is high. I wouldn't try to be too smart in this environment. I would not come at this. I would not approach this market like you know exactly what's going to happen, because the moment that you think that your support's going to hold up or your resistance going to hold up, you can be gravely mistaken if you're not managing risk, right? And I'm not coming from this as a point of being bearish or bullish really right now, because in negative gamma territory, it can be very bearish, but it can also be very, very bullish. Meaning that you can see these rip your face off rallies, and you could see that if you just go to the SPX, like just take a look. During this was in negative gamma territory a lot of the time, right? We can go back through history and look at the times that this was negative gamma territory here. If I go to Gamma Labs, I can look at I think context, volatility. No, I forget how. I forget how to pull this up. No. It's SPX, Gamma. Come on. There's historic Gamma here. I know there is. Now I want to find it. Come on now. This is going to bug me. This is going to bug me. Give me a second. Dude, I know that it's on here. I've seen it. Ugh. Come on, man. I know it's here. I know it is. I know it's not strike at the money vol. At the money vol is pretty cool though too. You can see these rises up here and you know, closest to us right now. These like increase in volatility. That's pretty neat. But that's not what I'm looking for. Time series. It could be time series. Net gamma time series maybe. Ah, boom. I knew it. Okay, so look at. This tells you when you're in positive negative gamma territory, right? SPX net gamma territory. Do you see right here? All that right there? That was from August till basically the end of October. So if I go back to the SPX chart, August, you know, right around here. Where's August? August to basically the end of October. You see what I'm saying? So in negative gamma territory, the reason why I'm bringing that up is, do you see these face ripper rallies? Every single time we saw a big rally, it was a lower high, and it went in three waves. 1, 2, 3. That's very typical of bear markets or corrections and stuff like that. That wasn't a bear market, that was a correction. In terms of what Wall Street deems as a correction, right? 10%, whatever. Other people would call it a pullback, a bear market, whatever. But you get my point. And now we are, once again, in that negative gamma territory. And this is where you can get your face ripped off to the upside. And if you look back to the left of the screen, I mean, we're not separated far from the all-time high. We're not. You can't say that we are. It's right here. You know? But what you'll notice is that 5250, which was a level of importance, is still rather important. Now 5200 is kind of growing in size here. And you can see we're below 5200. So that is our local resistance for the day. So when I'm looking at this right now, just for today, I'm thinking, and then I'll go to gamma net zero dates. Yeah, 5190, 5105. I'm like, okay, so if I'm trying to map out what the market might look like today from, you know, a range, I'd say this could be the upper side of the range. At least given the information that I'm given right now. Let me just clone this and I'll make it red later. Come on now. Okay, so this would be the upper end of the range for today. That would be my guess. So if you're thinking like, hey, I think I can go long here, I mean, you could play it up into 5190, right? If the market wants to make it there. But on the downside, we got to look at that too. Okay, on the downside, I mean, that's some reach right there, 5105. I don't know about all that. I don't think that's going to happen. I mean, the reason why I don't think it's going to happen, unless something dramatic happens, is because I'm looking at the trade tab and the implied volatility just for the rest of the day is 25 bucks in the SPX. And, you know, that's further than $25 away. So, yeah, I guess if we get some news or some sort of catalyst that bumps us down here. But I'd be more like saying, coming up, 5125, 5120. Yeah, I would say this would be the range for the day. Right there. Okay, so based off of just gamma exposure, and you could do this earlier in the trading session too, but things change, right? As price moves towards these levels, you can get changes. Not all the time, and that's also data. But right now I'm looking at this, I'm like, yeah, I think that this is probably the range for the day. High end up here, 5190 to 5200. The low end, 5125, 5150. And then just an expected move perspective, it's saying, hey, 26 bucks from where we currently are, right? So that's even smaller of a range. Okay. Let's take a look here. I want to see, some people are talking here. I'm going to zoom into my tiny cam, desktop tiny cam, so people can see what's going on here. For some reason, hey, what's up, AA? It's my, okay, no, it's fine.
We're monitoring comments from Prime Minister Kishida, who's addressing Congress after the dinner at the White House last night, telling Congress that the world needs the United States to continue to play a pivotal role in affairs of nations.
A lot of stuff going over there in Japan, man. I'm not much of a geopolitical guy, but I am noticing some of these pretty interesting things taking place. So maybe I might have to clarify my thoughts before I just ramble on it to go over some of that information. Because there are various intermarket assets that can very well put pressure on the markets that are a little bit concerning. Let's actually take a look at some of the intermarket assets right now. So I found out the whole, I don't know what happened, like they changed it apparently. You used to be able to just pull up TNX, and now you have to pull up TNX CGI. I don't know. But look at the 10-year yield. Look at this 10-year yield ripping, right? Now we've been talking about how the market's actually been positively correlated, which it's typically negatively correlated. If you look at, you know, S&P 500 to long-term yields, we talked about it right here. And we're like, hey, it's positively correlated from a 10-day perspective and a 30-day perspective, but it's typically negative, right? So the bet would be that they would go back to a negative correlation. And, you know, we saw the market respond off CPI. What else did we see? We talked about the dollar on the last video, I think it was, that said, hey, like, watch out, because this could put pressure on assets. We said this could put pressure on commodities, but it also could put pressure, obviously, on the financial markets, too. So we saw a huge breakout here in the dollar as it was pulling down. I think it was this day right here we talked about it. And then boom, we saw that on the CPI report. And where are we? We're at highs once again for 2023. And what's crazy to me is look at gold. Gold is not even phased. Gold is separated from its high for the year. So, and this is interesting because typically these are negatively correlated, right? Because gold price in dollars. You know, dollar goes down, gold becomes, you know, could go up. Gold goes down, or dollar goes up, gold can come down. And there are times where that correlation breaks, and the times that it typically breaks is not good times. So you got rising gold. We looked at copper. You have copper, and copper's coming off a little bit, but this is 1 day separated from its highs for the year. Gold up, copper up. It's down today. Oil just literally consolidating right here.
Kishida saying that China presents the greatest strategic challenge not only to Japan but to the pace and stability of the international community.
And I'll pull up some other names here too. So just be mindful. Copper up, gold up. Okay, so what I'm saying here is this is all like the markets were right about the inflation report. You see what I'm saying? The markets were moving up. The markets, basically, all these inflationary assets were saying, yeah, inflation is going to be higher or potentially hotter than expected. Now, I wouldn't know what the market's going to do if I had that information, but it seemed that way, that it could come in hotter than expected or in line or whatever. And it came in hotter than expected. And surprisingly enough, the market didn't even fall too hard. Let's be real here. It came in hotter than expected. The market fell 1%. 1%. It wasn't that dramatic. Today it's holding up rather well, right? SPY, I mean, it's flat, dude. It's flat. It's completely neutral after getting a hotter than expected inflation report. And then the market, let me see here. See if I can pull it up. Oh, there it is. Never mind. I didn't need to do that. The market is pricing out rate cuts, right? So May, June, July, and then you look out further and you're looking at one rate cut. So that changed dramatically. And what's the market doing? The market's holding up. The market's holding up. Market's holding up. So it's going to be interesting to see how Fed Powell, approaches this, because his narrative on the prior meeting was, it's just a bump in the road. We're not going to get overly dramatic, just like we didn't get overly excited. And he's going to play it by data, and he's going to be a wordsmith. I did find it interesting that we were getting reports about Biden was saying, oh yeah, we can expect a rate cut this year. And it's like, those things are supposed to be completely separated, right? Those things are supposed to be completely separated. It's not supposed to be political, which, we all know is, baloney. There was some news about Powell out yesterday about this leak, and it turned out to be nothing. It was nothing. They hyped it up, and it was nothing. I'm not even going to talk about it because it was literally nothing. Nothing. Hey, nothing. All right. So where are we? We're still within that range today. Let's look at market net flow, and then we're going to get into some individual names. The market net flow looks incredibly bullish here still, right? I mean, look at this divergence. Green line, straight up. Red line, flat lined right around zero. S&P 500 is moving up. Convergence. I wouldn't fade it. I wouldn't fade this. Right? We're flat for the day. Going to NQ. NQ is NQ is trading within its first 30-second opening range. All right, trading within the first 30 seconds, coming in a little. Choppy, right? Boom, you get aggressive move, aggressive move, aggressive move, aggressive move. Fake out, shake out, make out, take out. We're holding above the anchored VWAP from the swing low for today. That held pretty nicely. And we're above the daily VWAP for NQ, and we're above the PPI anchored VWAP, all within this little area here. Okay, that's what that is. All right, let's pull up Thinkorswim. We're gonna pull up some of these individual names. I'm gonna write them down first. So if you wanna reiterate some of these. Hey, good morning, Kel. Let's take a look here. So do I day trade? Trade and grow. Do you day trade and stock transaction? Do I day trade stock transactions in these prop accounts? These are futures. These prop firms are futures. There is a prop firm that I'm looking into a little bit that trades equities. I'm not really too interested in that because I thought it was interesting, but I didn't like the payout split. And on top of that, I trade equities in my own personal accounts. But I thought that it could potentially be beneficial for other people that want that want leverage or want to have a bigger account. But it wasn't cheap. It wasn't that inexpensive, and the tests were probably pretty hard. I'll do some more digging. Okay. Hey, Fernando, watching from Dubai. Wow, cool. That's awesome. Okay. Ba-ba-da-ba. Hey, Deck and Dougie, thanks for the follow. Career Low, thanks for following here. Hey, Mad Nepali, thanks for gifting a tier 1 sub. Gifted a sub to somebody. That's awesome. Thanks for helping out the community. Okay, pull up some of these other. Trying to see if I miss your ticker, put your tickers up here. I know somebody wanted me to in the Discord today wanted me to pull up coins, so I'm going to do that now. I'm just gonna ping him really quick and just tell him that I'll pull it up. So if you can't see it live, then it is what it is. But oh no, sorry, not coin, hood. Okay, so I'm gonna write some of these down. Hood is gonna be the first one. I just pinged him because he wanted just my thoughts on Hood. Hey Kevin, I don't have much thoughts on the yen yet. I do and I don't, and I don't feel like I just don't feel like in a place to really start talking too heavily about that now. I feel like I gotta accumulate my thoughts and really kind of like show it from a intermarket perspective of why I think it could be important. So I'll probably try to get that together in a market brief episode, because there is some big stuff going on there. But I gotta get my thoughts down and really kind of research it before just like a quick look, you know. Triathlon Trader, I'm getting these Gamma levels from Gamma Labs. There's other services. Gamma Labs is pretty cool, in my opinion. There's Tier 1 Alpha. They do a great job, and they give a lot of data too. It's more than just these Gamma levels. There's probably free services out there, maybe. Also, TradyTix does great because they aggregate the data in a certain way, so they take out various things that they don't see of high importance. So TradyTix is one. Good morning, Johnny. Vin is asking if I can swing trade on futures prop firms. Not the one that I'm in.
Nelnet and
there's probably some out there. I think one of the guys from the chat or from the Discord, Moonraker, said Surge Trader. I've never looked into it yet, but he said that you could. You'd have to check and see like how margin and the amount that you can hold for a swing trade. I really don't know. Thanks, Anton. Tesla. Okay, we'll pull up Tesla. So we're going to be looking at Hood. We're going to be looking at Tesla. We'll probably look at some of the larger market cap names. You go along Meta, Microsoft, Amazon. I'm going to pull up those names. So those will be names that I pull up. I'm going to look at the top 7, top 10. Okay. And then we're looking at Snow. So Enexor wants to look at Snow for sure. Trader Joe mentioned something, right? Trader Joe, did you say to pull some? Oh, you said Snow. Okay. Yeah, Snow got hit hard, man, and yeah, I'll pull that one up. Sway TLT, surprise. I don't know if this. There we go. Thanks, Trader Joe. I knew you had some locked and loaded. Trader Joe, man, since you're in the Discord, man, and all your charts are pretty in line with what it is that I look at, I gotta see if there's a way that I can put a badge on it as like an authority in the chat or in the Discord. Because your charts are literally just on freaking point. A lot of them line up exactly with what it is that I'm looking at.
4 and 8 week bill auction shortly.
So I don't know. Maybe we could reach out and figure something out.
4-week bills running
TTD.
5.270%.
Start a podcast. Me and you.
2% a lot at the high.
Do something cool. It'd be fun to collaborate with more of the community.
Did cover 2.95 for
Okay.
the 4-week bills.
Yeah, NTRA, ERJ. I know ERJ already. That one looks good. eBay looked great too. All yeah. It's funny because a lot of these names I'm like yeah. All right, so I'm gonna pull up Hood now because I mentioned that to the person who asked. He's looking more at like 2 months out, and Hood looks good. Okay, Hood moves with like
0%, 64.3%.
No.
A lot at the high, but cover 3 spot.
let me think my thoughts.
1.4.
I'm gonna scratch what I was going to say. Hood looks good. I'm gonna look at it from a technical perspective. A big gap down today, but we're roughly at the highs of day. Right out of the gate, look at it. It's a very clean flag. Okay. Now he's looking like, hey, do you think it's gonna go higher within the next 2 months? I mean, here's what I look at. Like, one, you don't know where it's gonna go. So why am I gonna try to control that? Okay, so there's 4 things that we can control. Okay. What we buy. So we're talking about Hood. So that is what we buy. Okay, cool. We got it. 2 would be when we buy it. So when. Okay. Now, it sounds like he was already in a position. Okay. I don't know where, if it was here, today. I don't know. Okay. But you can only control, okay, what you buy and when you buy it. And then 3, man, I'm all over the place today. 3, okay, so what to buy, when to buy, how much to buy, how much. So this is all about position sizing. That's another thing that you can control, okay? So are you going full bore? Are you keep on leveraging? Is it too big of a position? You got to consider that. And then the 4th thing is when you sell it. Sell, or when to get out, when to sell. And that means risk management, right? So where you can potentially take profits, where you're going to get stopped out. More importantly, where you're going to get stopped out. Like that's the second trade, right? With every one trade that you take, you should actually have 2 trades in mind. The first trade is the execution. The second trade is when you get out, or where you put your stop, like the second trade. Start thinking in terms of that. The first trade is not nearly as important as the second trade. And a lot of people that take a first trade don't have an idea of their second trade, okay? So when I look at this from just a technical perspective, watch for a trend break, right? We have a very nice inside trading day today. So if it breaks above the high of the prior day, say if we close where we are and it's an inside trading day, we still have a lot of time left, right? Still a lot of time left. It's below a 5-day moving average. It's declining. So, it'd be nicer to see this curl back up. Now he's saying 2 months. Now this is why I don't trade options, is because trading equities is hard enough for me. And when you add options in the mix, you're adding another equation of difficulty, which is time. Now, if you're just buying, calls or buying puts, you deal with the data, right? Time decay. There's, various ways you can go about spreads, and options were designed to be a risk management tool, right? They were. But right now, like I said, I'm looking at this. I'm like, yeah, this looks great. Nice little wedge here, nice little flag. No confirmation yet, but I do like today's reversal. Started down on the day, came back up, looks pretty decent. It's below a declining 5-day moving average. So yeah, to be long this would make sense. Why? Because the trend is up, it's pulled back, and look at the declining volume. Look at the volume. You see how the volume right here is like stair-stepping down? Boom, 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 boom. Drying up, okay? Price action, contracting, volume, contracting. This is setting up for a good risk to reward trade, meaning that if it breaks out, you have a clear idea for risk because it's contracting. And if it breaks down, well, you don't need to enter, or you could get out. And then you could wait for it to turn back around and go from there. That's Hood. Does that help? Their 3% IRA transfer bonus is enticing from Inspector. For Hood, 3% IRA transfer bonus. Like what? Like, is there stipulations to that? Like, they just give you 3% to transfer? Do you have to hold it in there for a certain amount of time? That's like the easiest trade ever. Or is it like up to a certain amount? They're like, give you up to $3,000. Have to hold it for 5 years. Ooh. I mean, a lot can happen in 5 years. Oh, the gold card. I've been hearing about the gold card too. Hey, I gotta say, they're making waves. They're definitely approaching the right market with the right tools. I heard about the gold card. It sounds pretty dang cool. I heard that it was real gold or something like that. And then I heard that the rewards were good, or the cashback was good. And if they could just do good cashback, good rewards, and they don't have like a bunch of like layers and stipulations to all of it, and there's no fee. No, there is a fee. How much is the fee? It's like $5 a month, huh? Or something like that. Hey, so did you guys know? Did you know? So there is an employee, a big employee at Thinkorswim. Now it's Charles Schwab, but it was at Thinkorswim, or TD Ameritrade, that worked on the Thinkorswim platform. Okay, and you look this up. This is actually this actually got me interested at Hood a lot lower in the price action. Way down here, but it took forever to start moving. But I did find it very interesting. I may have mentioned on a stock market brief show, but somebody from that helped with this platform specifically, they brought on the team at Robinhood. And when I heard that, I was like, oh man, they can really potentially use him to expand on the platform to make it something quite nice. From my understanding, not much has changed from the platform perspective yet, but you never know. You never know. Okay. Don't touch the CEO. Yeah, I don't really know too much about the insider people. I just remember them bringing on somebody from TD Ameritrade and who worked on this Thinkorswim platform before it kind of went to heck. I still love the Thinkorswim platform for research and stuff, to be quite honest. It is a good platform. It's just, never gets updates. All right, we're going to look at Tesla, but in order to look at Tesla, you know the drill. We got to hop in the Tesla car. All right, let's take a look at good old Tesla. I mean, okay. Right over here, we thought that it was basing. We proved to be wrong. But it did go higher into that year-to-date anchor VWAP. And now, I would say this is more of a sustainable base because it's a little bit larger. It could not be, but also, god dang earnings, man. This right here is, this qualifies as a potential base. Like it's basing out, like it's trying to create a bottom, all right? Does that mean it's going to be the case? No, but here's the thing. You get this little, double bottom, you break from this high, and then you can really start popping back up into these areas, 200, maybe even higher, all right? But when you zoom out, I've been saying this very frequently, even if you zoom out and you come back up to 215, you're still putting in a lower high. So you're gonna have time to really think this one through, right? To see of an eventual break of this giganto, trend line that's been holding. So when I look at this, I'm looking at the weekly MACD here. The histogram's turning up. This is kind of curling up-ish. I mean, before we were talking about it when it comes back into this trend line and we'll see it bounce, and it did. And now we're there again. But look at, here, it was like this little wedge. Here, it's still kind of just going sideways, right? So we're not seeing the strength. We're not seeing it yet, which leaves the door open for the bears to come right back in and attack. But it's also given a fighting chance for the bulls. So what do you do in this case if you're want to be a little bit more tactical? Well, one, you got to realize that earnings is, what is this, next week or so? In a week or two? You can go into the 15-minute time frame and you can look at the 5-day moving average and you say, hey, what's it doing? Is it turning up? Is price action above it? No, it's neutral, which we kind of would estimate that. We would guess that. And prices are currently below it at, the point of control for the last 10 days or so. So if we can get above it and this starts turning back up, then we can break a high. We can have an idea for the risk. So for example, we have a low here. This is a higher low. So now I mean, we have a low, we have a high, a lower high, a lower high. So perhaps, I mean, perhaps we pull back in, create a higher low again, break this prior high, and that could change kind of the trajectory of this trend right then and there. If I'm looking at the daily time frame, I mean, this looks like a pretty strong move up, right? And now it's kind of just pulling back a little bit here, and the bulls keep stepping back up, and the 20-day is starting to kind of move like this. So, I mean, this looks like, let's say if we break the hot today's open price, you know, tomorrow or today, I don't know. Well, I don't know where it's going to close. But I mean, like, why couldn't it come strike back up and come for the 50-day or come for this prior line right here? And even if it doesn't, I'm looking at this from a risk to reward standpoint. You look at this and it's like, okay, that would be the reward potentially, right? It could go higher, I'm just saying. But where would the risk be? It's pretty clearly defined. If it breaks the low, right? If it breaks the low, I'd be like, eh. But then you're looking, okay, there's this little box right here. You can fit, you know, 2 of them in there. So that's a, you know, a 1 versus 2 risk to reward situation. Now it's a little premature to enter here. That'd be more speculative because you're not buying into strength really. It may be very short-term strength, but you'd also be, if you got in right now, like look at the 1 minute opening range. You're below it. You're below the 1 minute opening range. Okay. And these can hold as levels of resistance. I've seen it many times where it comes up and it gets back down, it chops around. So yeah, this would look a lot better if it came in and started opening, you know, getting back above that, consolidating and setting itself up. So, you know, that's how I would go multi-time frame analysis there in my Cybertruck. Hims, yeah. Is Hims looking a little bit better? Good stuff. I'll pull that one up too. Whatever happened to VKTX? I want to check that out. VKTX. Come on, man. So VKTX is one that I was watching for a break of this high. It didn't do so, but it's actually still holding up rather well. It actually came down yesterday, and I didn't execute into it because I was thought maybe you can play this lower trend line because it's still within this kind of flag here. It's like a pattern within a pattern. I still want to watch. I'm still keeping an eye on it, but nothing crazy there. Nothing actionable for me, really. Snow. Nice day today, up 2.51%. If you look to the left of the screen, though. If you look to the left.
Argentine Central Bank to lower their key rate to 70%.
It's been just going sideways.
Argentina.
Volume drying up. Breaking out of this little pocket right here. So if you're long, maybe a stop under today's low, maybe the prior day's low, and then go from there. I mean, this one got beaten up hard, so for a bounce could definitely make sense. That's like looking at like Lulu. Like look at Lulu, right? Somebody asked me the other day, what do you think about going long? I'm like, yeah, but you got to be very like aggressive in the long. So when was it? I'll just be very specific here. I think it was this day right here, or that night. I said, yeah, it looks like it can bounce. It just so happened to bounce. We said, you got to be aggressive and respect it if it breaks the lows. So, you know, went up a little bit, broke the lows. And I still think that this thing is going to be probably coming for a bounce, but that doesn't mean that it can't draw out further and then you see a bounce, and maybe not that high, but you see what I'm saying? Like, look at how steep this is. Look at that thing. Like, it's almost like we're just like, you know, I'll take a little stab at it and play for a bounce. That's wild. Just completely and utterly destroyed. Ulta, same thing. Big old bearish. This one's a little bit more scary because you have this big bearish move and it's just trading with inside this candle. So yeah, like it's just consolidating there. But oh my gosh, what name was I just pulling up? Lulu. Sheesh. Lulu. I mean, Lulu's been kind of just a straight ticket down, you know? And where's it at? Lulu's undercutting this prior swing low. Man, just a fall from grace. Look at that thing. It's down 31% on the year. Holy macaronis. But you know what's not down? The price of their clothing. Good one, Mike. Good one. All right, let's pull up some of these other names. Actually, before I pull up those other names, because I know what they're going to look like pretty good, I'm going to quickly view into the markets, look at market net flow. Market net flow, still positive convergence. Market's pulling back slightly there. Bullish divergence, bullish convergence. $51.05, $51.90. 51.05 to 51.90. That is still here to here. I don't think we're going to 51.05 today. Something dramatic would have to happen for that to take place, people. Why don't I think so? Is because if I can pull up the trade tab and tell you right now, the market is, the implied volatility is shrinking on the day. So it was at like 26 bucks when we started talking about it. It's at $23 now. Okay. I don't think it's going to 51.05. But people are reaching out there. So I don't know why. Maybe they know something. Maybe they know something. Or maybe they're just taking a wild stab at a potential move. Like, how much is a 51.05 like 0 day right now? You know how like every once in a while you're like, dude, this thing went up 10,000%. It turned $5 into 2 million. I feel like you look at the 51.05s. Give me a second. I'm just gonna look at it right now. Let me see. Did I got this right? What is going on here? 51.05. 51.05. What is going on here? Where am I at? Where are you? Okay, okay. I even feel like that's expensive. 60 cents. 60, 70 cents. But imagine what this would be like. Can you imagine what this would be like if it actually printed? It'd be one of those things. I'm not taking a $60 stab at that. Never. I don't even trade 0 dates, but those stories happen. That is my point there. Okay. It's funny. Okay. Lulu, weekly chart is the nastiest thing you've seen. Let me see here. You said weekly, right? Yeah, it's brutal. PANW, I'll pull that one up too. All right. Peloton. You want me to pull up Really? Peloton? Are we coming back to Peloton days? I remember Peloton was at like 135 and I turned to my buddy, we were golfing. I was like, I honestly think this would be the best trade to look out 4 or 5 years or 3 years or whatever it was and just buy like $3 calls on, or not calls, puts on it. Like just way, way, way crazy. I definitely did not do that. But I remember doing the math. I was like, dang, these things would print like crazy. That was like in the height of 2021. I didn't take that trade, but it was still funny. It was the same thing with eHealth. Who remembers eHealth? I remember looking at this and I was like, dude, this is the easiest short I think ever. I even remember looking at this Head and Shoulder and I was like, this would be crazy, but probably possible. Just, dude, stupid. All right, let's pull up some of these names. Oh, Peloton is the nastiest chart. Oh, yeah. Yeah, Peloton, yeah, for sure. I know yeah. That's gruesome. Okay. All right, NTRA. All right, these are going to be some good names, people. These are going to be strong looking, roughly around the highs. Strong stocks typically get stronger. Weak stocks typically get weaker. That's the whole idea behind trends. A low, a higher low, a higher low, a breakout, consolidating right now. Inside trading day, those set up, right? Inside trading days are great because that's just telling you that things are contracting. Give me a second here. Uh-oh. Give me a second. Gosh. Dude, my son has been so difficult these last couple of days. So NTRA, very clean looking chart, tightening up here on the right side. and it just recently kind of broke out of this pivot. Very clean. ERJ, this was one that was interesting to me. This thing moves so far and fast. So I'd like to see it consolidate. Like, I like how this is consolidating. It's taking its time. Like, it's flagging out here. Okay. So that's a really clean look. This will probably pull up on the Holy Grail scan. Actually, I'll pull it up right now. Let's see if it will pull up. Actually, I won't scan, but I'll run it on my chart. So yeah, it definitely will. It's right, do it. So the Holy Grail scan, your ADX has to be, I think, above 30. This is at 42, the ADX, which means it's trending. You have volume that's drying up as price action's consolidating here slowly. And we haven't tagged the 20 EMA yet. The 20 EMA is at 25.01, and price right now is at 25.33. So it's not far off to create a Holy Grail setup, but then you have to wait for strength. You have to wait for the high of the prior candle to break after the tag. I would consider that. I would consider that a setup in the works. Same with FedEx was doing the same thing. FedEx was doing the same thing. I'm gonna reset this one up because I was looking at it right here.
Soy and wheat futures.
Look at FedEx. Like, this is a pretty nice wedge pattern here. If I pull that up over here on my, let's see if this is set up. Yeah, so this is a Holy Grail setup right now. It would have to break the high of this candle right here. So if it breaks the high of this candle, you'd have a stop here. You'd buy stop right here, and then you'd play it to the swing high here. That would be the risk to reward. Risk, reward. Give me a second here.
We're reporting here out of Brazil. Brazil is reportedly not discussing any changes to the chairman role at Petrobras.
Petrobras. That was one that I actually liked.
A lot of reporting over the CEO and chairman roles for this.
So yeah, ERJ, good clean look. Let's go WRK. Oh yeah, this one is another one that I liked. Yeah, you see my annotations on it. So WRK, also just like, and the reason why I drew this line here is I measure the pull from a potential breakout area. So target would be around 53. Also watching the trend line break, very nice consolidation. And remember, it's not to get these right or, wrong or whatever. It's you're looking at the small risk. Because eventually you'll catch a trade and it keeps going and going for you, but you can take small stabs to take potential nice move there. So that's WRK. Give me a second, man.
ECB policymakers are making the case for a pause in July on risks from strong U.S. inflation, energy, and geopolitics, but they do expect to cut interest rates in June, according to the ECB source story. ECB sources saying the doves are still eyeing cuts in June and July amid benign labor markets, but some ECB policymakers will make the case for a pause if they start cutting in June.
Okay. Sorry, WRK. Let's go to eBay. What is this? This kid, man. Okay, eBay. Also a nice setup, right? What are we doing? Kind of going sideways. What is this? That's a higher low building into this pivot. What's volume doing?
In terms of the WASD report,
volume's drying up. Now, earnings is not too far away, right? Always got to look at when earnings is.
Corn at 2.105 billion bushels and wheat.
Right? If this can tighten up more, it sets up for a nice breakout. But this right here, this was an earnings move right here. So you get a power earnings gap, consolidates, you follow through. Strong stocks typically get stronger. It's always important to watch these powerful earning gaps. Nice move there. TTD, is this Trade Desk? Or is this an oil company? I can't remember. Yeah, the Trade Desk. Trade Desk is also one that, these are all setups that I would take. The trade desk, look at this. All right. Nice little flag pattern. You can even draw from right here. Tight consolidation, so we have a strong move. Look at volume. Look at volume. Volume's drying up here greatly. And you got this pulling back, consolidating, getting very tight. So you break out, you have a tight stop, tight risk, potential reward to the swing high, or you can even measure from the swing low to the breakout area, right? It'd probably be 95, 96, maybe even try to target the 100. And what's it doing? It's in bullish context, right? Look at the weekly time frame. But if you don't want to get chopped up, always look at the weekly time frame. The weekly charts are great. The weekly charts are great because it'll ease your mind and help you, position size a little bit better. But like even that, you break out back to test this area, like it could do something like this. That could be a monster hit, right? You just got to manage risk. Don't worry about where it can go. Worry about how you're going to manage the risk, right? What you can control. If you look at this, right, you see this trend line down here, and look at that big break. That's a huge break. We had the pullback, and now we're seeing some strength again. So this was a huge move, and now we're kind of following through, right? This was the earnings move of a big break of a trend line. You're above all these rising moving averages that are rising. I mean, it's a clean setup. Go back further. You go back further, even further. Look at it. I mean, yeah, you have this like one time over here. When was this? This was like what, 2021? No, 2020. Okay. I mean, shoot. Like imagine if this thing doubles the size of this base.
Dish Network
right?
is taking.
This is the base.
Receiving financing.
I mean, that's a pretty steep base, right? That's over. I don't really. But you see what I'm saying? Like a technical move of that base would be, up to 140, 150. Don't rule it out. Don't rule that stuff out. We've seen crazier stuff happen. I mean, look at NVIDIA, right? Okay, HIMS. Yeah, HIMS is still looking good here. Powerful earnings move. We had the follow through. Now it's consolidating. We did have, so these days right here. So this was a good volume day, but then we followed through with a pretty big volume day here. And that was kind of with the market. So if the market gets clipped, I'm afraid that some of these names might get clipped too. But if we ignore that, right? If we ignore that and just say, look at today, right now we're trading within a very small range candle. It's basing out. So this looks like, hey, if we take out this high, or even a speculative entry, you enter early and you just have a stop right here, you can look at risks like this. It could pop like just up to the 20-day, maybe even higher. And that'd be a pretty solid move there. But you have an idea of like, hey, I'm going to get out if it takes out this low. If it takes out this candle's low, I'm out, right? And what would be the loss on that? It'd be, 3%. So not a small loss, but you'd want to beta adjust that. Good. Can you give me some water? Oh, no, it's okay. It's okay. Go ahead. I'll get some. All right. Little man's in sleep. Little man's asleep. Yep, so HIMS, another good one. So, like, yeah, okay.
Defense Collins saying expects inflation to continue to moderate. Strong job market reduces urgency of a rate cut need.
Okay, I want to be clear here. So, a lot of these setups look really good, right?
US soybeans.
These setups look great.
Soybean U.S. estimating world.
But I want to remind you.
40 million bushels above the 300.
Oh, hey, look at this. Market's taking a nice little move to the upside, breaking out of that opening range. This is why I say I would not fade this. Market net flow. Market net flow has been telling us something.
Why is he saying U.S. corn ending stocks
Okay.
at 2.12 million bushels versus the 2.11
Good look.
expectation. World
S&P
ending stocks
500, not too far off the week to date.
3 million tons.
Anchored
versus
VWAP.
317
Looks like
million
it's actually
tons
kind of in striking
expected.
distance.
And
Look
on
actually here for a
wheat,
potential play.
U.S. stocks seen at 1.81 billion bushels, ending stocks at 698 million bushels.
Still in negative gamma territory. Target if this move continues, 5190 to 5200. Okay.
Soybean futures are moving lower after the report coming in above estimates in terms of U.S. ending stocks and world ending stocks on soybeans.
Okay. Where was I? The reason why, okay, so what I wanted to reiterate here was we're under a declining 5-day moving average and we're in negative gamma territory, right? And flip line's still here. So what I've noticed is during these times, you get a lot more fake outs, a lot more, you know, you get a breakout, but then it fakes it out and it shakes you out. So be mindful of that. Like these setups, they look very good and you got to play them based off their own merits, but understand that the market conditions are changing right now in this time. So don't get too hung up if your trades stop working really well. You have an idea as to why that might be. It's because you have the market and you have dealer positioning very different, you know, working in a very different way and kind of against people that like to trade breakouts. You can like that's what happens. Like you can see it in HIMS. HIMS was looking great, and all of a sudden it gets pulled right back in. Right? That's many stocks got pulled right back. Okay. All right, let's see here. This could be setting something up here. So I'm going to go ahead and anchor VWAP in. We'll try to do this one live for a little scalp trade. Come on, where's the anchor VWAP, man? I always forget where it's at. Are we serious? What's going on here? I am ding dong right now. There it is. Okay, anchor VWAP. I'm going to anchor VWAP from the high today. I'd say a potential anchor VWAP to this candle right here. Or this breakout candle. It's probably right around that same area. Maybe even lower. All right, let's give it a second here. It'll just be a guide. So right now what I'm looking at is price to flag, right? Price is pulling back. And I'm looking for a re-break of this to potentially pop right back up to this swing high. Give it a second. Just see, because it can pull under this anchor VWAP and get a little flush. But the main anchor VWAP right now for me would be watching this high. Okay? Let's see here. So what I'm noticing here on my screen is this is actually taking place. I gotta figure out how to put volume on. This little pullback. So this move right here was actually pretty strong volume. This pullback is actually happening on declining volume here. So this tells me that we can come try to retest this high right now, okay? Maybe not right now, this second, but that's what it's telling me in this current moment is what I mean, okay? So watching this anchor VWAP from the swing high. See if it sets anything up. Okay, market net flow, still looking good here. We're gonna go over the MAG 7 or 4 here momentarily. I just wanted to kind of give you an idea of what kind of some of the stuff that I look at like an intraday basis, right? I'm not gonna fade this strength in a positive territory like this, but I do like looking for things like this to set up. You know, so we'll see here. It's pinchy pretty tight here. So if this is the low, I would actually anchor, so I'd remove this thing right here. I'm gonna keep it like that for now. But right, so like look at, see how it's kind of, if I just anchor view up to here, it's holding. So if this cracks, it can probably flush back to retest this low. But it's kind of just pinching between those two as it stands, consolidating, right? Still not breaking really this anchor view up from this level. Not far off. Little consolidation. Waiting to see. These things can happen pretty dramatically and pretty fast. And this is like I said, just looking at you know, a very small time frame, setting it up from just a very tiny intraday level. Still nothing yet. It's trying to break it. The goal would be to see if we can get to the swing high. And even if you look at this like in terms of like a bull flag, like this was the flag, right? So let me actually just draw it out with this. Say if this was a bull flag or whatever. Ah. All right, so we closed above that anchor VWAP. It's still, like I said, it's a little choppy, but you can maybe move it like that. I mean, that would be crazy. That'd be a big move right there. But remember, negative gamma territory, okay? Negative gamma territory. Let me remove that. Just watching it consolidate. It's trying to hold up. That was an inside trading candle right there, just from a 30-second time frame. So it is getting a little bit tighter here. So now I'd say you'd want to see a break above the high right here. And that would be a little bit better of a sign. If it breaks the low, could get a little bit more of a flush. All right, it's getting really tight. That's 3 inside trading candles. Here goes the move. We're gonna get some sort of a little pop because it doesn't hold this tight for too long. Okay, careful. Okay, it could be flushing. There's the move. Careful. Still going sideways. I think it's still something that we can catch. Going to continue to watch it here before I execute. Remove this because there's a new low, or not quite a new low, but not too far off. I'm going to remove this one. Oops. All right, still watching the swing high anchored VWAP. I think we can still come up here, but I want to see it tighten up. This was very tight price action here, and then we had just a quick little flush. So give it time. Give it time. The reason why I'm watching it right now is because of the nice, pretty strong breakout with some decent volume. So now, and then on top of that, marking that flow. So if we're going to get some continued price action and start to trend, I feel like this could be one of the kind of consolidations or pullbacks that we see before that, if that makes sense. So we have a high, lower high, low, currently a higher low. Looks like it's going to be taken. There's the new low. So this would be the trend to watch. Still going lower. Let it go. Let it go. It'll set back up. Okay, why that's going, I'm gonna keep an eye on it actually. I'll keep an eye on it. I don't want to get off of it because I do want to trade this if it starts moving. Sorry, if I can't look at the chat in this current moment. If I'm going to trade, I gotta be a little bit more focused in. But I'll let you know when I'm looking into it. But right now, look, if we didn't even have price action, we just had higher lows, lower highs. You can see that. So you really would need this to change. I would prefer this to happen. I would prefer that, not this. Right? So we'll see. Even that. Like all that would be fine. but I don't want it to come straight and take this level. I would want a higher low. New low. So now we got this. Still be patient. Don't fight a trend. Market net flow waning a little bit, but not by much. Still looks fine. Come on, baby. All right, I'll look at the chat right now. Because the longer it goes on, the less willing I'm. You want to take a look at Apple? Yeah, we can take a look at Apple for sure. I'm just keeping an eye right here. This is This is NQ. NQ right now is what I'm looking at. I'm just watching to see if I'm seeing if we can get a continuation of this breakout here. And right now I'm watching a series of higher lows and lower highs consolidating. And then I have an anchor VWAP from the swing high over here from the high a day. I would like to see that cleared. We had a clear, but it didn't really hold it, right? A 30-second close above it doesn't mean too much. So if you do take these trades early, what I did like here is if you zoom in, what do we notice? I don't like playing the strong move through it, but we noticed this get tighter. That was an inside trading candle. And then the next one, inside trading candle. And that right there tells us we're probably going to get a move very shortly, whether that's an expansionary move to the upside or the downside, we don't know. And it broke to the downside. So now, what do we see? The trend is still down, and now the range of the candles are tightening up here too. So this means that we're probably getting ready for another little pop of some sort. And by pop, I mean it could be up, it could be down. But right now it's kind of pressing here, looking like it wants to flush. But if the bears can't do it, we can see a quick pop up, maybe see it consolidating again, try to change the series of lower lows to a higher low and then a higher high. Okay. Ooh, yeah. Should we get in the rocket ship? Does that make more sense? Let's go in the rocket. Let's go in the rocket ship. Come on, let's do it. Come on, baby. Let's go. Ah! All right, so we're seeing a little strength here, but it's still not really changing the structure in the short term. Really yet. All right, I like the little pullback there. We're kind of dangling around the swing high anchored VWAP. Ooh. I'm getting tired of waiting. That means I'm gonna go start looking at the probably the Mag 7 and seeing what's going on there. Okay, so I don't mind that. So look at here. We got a high, a lower high, technically a lower high on this little pullback. You have a low, a lower low. I wouldn't really consider this a lower low right now, but this would be the low. So now I would like to see the breakout. I'd like to see the breakout over here. I'd like this to hold and then get the breakout. I don't want to get this clipped and then break out. If that's the case, then I'll redraw it out. It looks like it's going to break it. Come on. Let's go. Yeah, it's going to break. Break low. Kind of matching lows. Oh, I gotta check on my baby. Still asleep. Good boy. Okay. Resting. Price resting. All right, so still lower highs, lower lows. Lower highs, lower lows. Still hasn't changed anything. Still a nice digestion. Volume's getting pretty tight. Like I said, I still would prefer to see this. Okay, so low, lower low. This is technically a lower low here too. Come on, pull back a little bit here and tighten up and then break. There we go.
U.S. stock markets are drifting back
There we
towards
go.
the quarter of the daily range. The S&P cash back in a positive territory.
I want to show a live
Nasdaq
trade.
up more than 100 points. Take a look at the U.S. Treasury curve. The short end of the curve is
If it
slightly
sets
low,
up.
with the 2-year down to 4.95%. The 10-year up about 4 basis points at 4.58%.
Nope.
Do have a 30-year bond reopening.
Trend
in
still
about
lower
45
lows, lower
minutes from
highs.
now.
All right, there's the pullback there. Okay, okay. Tighten up here. Tighten up. Tighten up. Stay above. And then we'll get going. Am I still on my rocket ship? Should I keep my rocket ship on or no? We are. Oh, we're in the rocket. I think there's a good case to be in a rocket ship right now. All right, here we go. Come on. Tighten up a little bit more. Tighten up a little bit more. Give us an easy entry, an easy view. Tighten up. Pull in, pull in, pull in, pull in, and then go. Pull in, and go. Pull in, pulling in, pulling in. Good. Inside trading candle. Come on. Let me see here. Come on. 10 more seconds of this. Hold in. No, don't pull in too much. Here we go. Yeah, inside trading candle. All right, here we go. Come on. Now hold in. Hold this low at least. You can pull in a little bit more. That's fine, but I'd prefer now get even tighter and then break. Now break. Here we go. Come on. Come on. There we go. Make it. Make it run, baby. Let's go. All right. Let's go. Let's go. Let's see if it holds. Okay, so as it stands right now, so what I'm looking at this, that's a pretty clean break. Let's see if we can get the follow through. I'm going to anchor VWAP right here to the swing low. You can see how price is kind of tightening up here. So under this candle, then you probably got to get stopped out. Right now it's a 1-for-1. So if you play the breakout, you can probably have a 1-for-1 risk right there. That's a very, very tight. So I'm not saying you have to be this tight. Looking at market net flow, it's pretty bullish for the most part. Kind of flattened out over here, getting a little choppy on this consolidation. But we're trying to break and hold that swing high. Swing high anchor VWAP, but it's chopped up. Nope. Oh, no. Oh, no. Bostic at 130. Yeah, Bostic can change things up right quick. Actually, typically it's sell-offs into like macro events. All right, this thing is just chopping around. Now I gotta wait. I gotta put on some hype music. All right, so it's below that anchor VWAP, a little fake out right here. So you gotta wait for it to consolidate again. Waiting again. I still think we come target this swing high. So that's what I'm waiting for, trying to position for. This little thing right here, I took a little entry and I just got out right there. So very, very small scalp, and I'll re-enter if it starts showing strength again. Just to give a quick visualization of what it is I'm seeing. I'm seeing a high, a lower high, another lower high, a low, a lower low, a lower low, a higher low, sideways price action. Still trying to target higher. Market net flow. I wish this was still kind of aiming up, waning a little bit. So that means you get chopped. Okay, I want to pull up some of these Mag 7 too. Oh, I'm still in the rocket. Maybe I gotta take the rocket off. I forgot. I always forget when I'm in the Cybertruck and when I'm in the rocket. The rocket always jinx it. By the way, just so you all know, when I trade, I'm a very tight trader. So if I'm wrong, I'm pretty much just out of it, right? So this little move right here, a couple bucks. I want to catch the bigger move, but I also don't want to get drawn down. Come on now, take out this high. There we go. Come on now. Let's move. Nope, come on. All right, I want to pull up. Okay, it looks like it's trying to break it. It looks like it's going for it. While this is going, I want to pull up Apple. And I want to pull up Nvidia. There we go. There's a little pop. Let's get some continuation, though. Let's get some continuation. Let's get some hype up there. Let's get some hype. Let's get some hype. Let's go. Come on. All right, we have Fed Bostic, I think, coming out soon. Somebody mentioned in the chat. I don't know. Can't verify that, but there's the pop, people. Come on, finally. Here we go. All right. I don't know. A decent little scalp. Decent little scalp. I think that there could still be potentially upside there. So it's one to watch. I scaled 2 out. I did 3 micros and I got 2 out already because I want to focus on a couple other things. I don't want to get stuck here just trading. I don't know if people even like this if I trade live. So I took a little loss here and then I just caught in to make up for those plus some. How much? Not much. I got chopped up in the early session of the trading day and I made a little bit back. So now I'm a little bit positive on the day with one left, 1 micro on right now. I'll show you what it looks like from my end because I'm probably going to get out here soon. I'll just leave that on. I'll just leave that one on. There we go. Oh, shit. Why is this so like, it's such a horrible, no one can see that. How? This little boom and then right up to there. Okay, that's a horrible, horrible view. See, I took the rocket ship off and then we move. What's going on? All right, so 5190 would be the target level on S&P 500, but I'm looking at NQ right now, just right to these highs right here. I'm gonna just leave mine on and I'll probably put it to break even, the stop for the micro. Like I said, it's 1 micro. Nah, screw that. I'm going to move it up a little bit higher because of commissions. At least make up for that. Okay, there we go. So my stop's under these levels. It's under these anchor VWAPs. So if it comes down here, I get stopped down on that and I take profits on those too. Okay, so that's that. I want to go into now, while that's going, I want to go into some swing trade stuff. So I want to look at the larger market cap names. Apple was one on the radar, and Apple's doing quite well today. If you are in the Discord, you saw this as my last
figures were higher than
last trade idea, I should say.
Wage growth is consistent with the path back to 2% inflation, says Collins.
Give me a second. I'm trying to look it up. I want to make sure that I'm talking correctly. Yeah, so, okay. The reason why I brought up Apple is because Apple has been just slammed, right? And like, look it's a bad trend, right? So these ones have to be a little bit more aggressive. But I want to reiterate this for the people that are in the Discord that may have saw this and like considered it. It is a low risk, potential good reward. And what am I looking at? I'm just looking at, hey, like it's a horrible, what did I say? I'll just read exactly what I wrote, right? Because these aren't trade alerts. They're just ideas, thoughts, whatever. It looks like I'm going to get stopped out on that last micro too, by the way, unless something changes right here. I said, Apple, it's not a great trend as we hit new lows for the year today. However, which was yesterday. However, I can't help but notice how price is getting fairly tight here. Volume's drying up. We are at a previous area of support, and there's some positive divergences showing, watching for a break of today's high to see if it can lead to a pop. That was talked about yesterday. Yesterday, about 40 minutes before the market closed. And what am I talking about? I'm saying that there's positive divergence in the MACD, positive in the RSI. Price action is getting very tight here in this little wedge formation. It's been beaten down for the year, okay? And it's coming into a prior area where we bounced, and we bounced from prior. Now, I don't know if it's going to bounce or we were, but this is how I manage that trade. I look into it, I zoom in, I say, okay, I wanna see strength first. What's the strength? I wanna see a break above the high of the prior day. It did that, and they said, look for a potential pop, and it popped. So now what? Well, right now, that it could have been an entry. It's basically up here, and if you have a stop here, you're already at a 1-for-1 trade. Or you can expend the stop down lower, right, down here, and then maybe move it towards up there towards the end of the day, and you could trade, and you could just follow. You can track the low of day each candle. So if this wants to go again and go again and go again, you can go stop, 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 updated, and you can catch those moves. Okay. The reason why that could be potentially good is because, I mean, look at it on some of these days. Like, for example, I don't know, like yeah, sure, like right here. Okay, caught this, caught that, you would have get stopped out, right? So there, that would have sucked. But there's other times where it's like, okay, maybe you entered here, or maybe you entered on this day, on this like bullish engulfing, and then you put a stop there, 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 then you get stopped out. So think about that as far as in terms of like potential trades, like it can get stopped out and take this low out tomorrow, or it can potentially go and go and go. Oh, it was stopped out, by the way, on that trade, I think. Let me go back over here. Yeah, stopped out. Another low. So a little choppy at price action here. Caught two, and then I stopped out break even on the, or not break even, little positive gain just to make up for the commissions. So in the larger time frame here now, if I zoom out, if I want to reset up a trade, I'm going to remove that. I'm going to remove that. And what I'm looking at now, because you're getting a pretty dramatic kind of, a little dramatic price action here, right? So we came back up. We didn't quite tag this previous high, but we came into the level of supply. That could be a double top as we're approaching down here, as we just cracked that, okay? Or it's a range, right? So if this is a double top, you can have price action come back down into this range. That's just from a price action perspective, okay? So it's a little dramatic in price right now. My son's waking up.
Next few minutes, good.
Okay, so it looks like it's trying to do that double topish sort of thing. And then, wait, yeah, isn't Bostic talking here or something like that? Let me go back over here. 11:30 a.m. Wait, no, that's a little bit later. 12. No, no, what's 11th? There we go. Fed Bostic 10:30. Oh, that's in an hour. Okay, in an hour. And then we have a 30-year bond auction at 10 a.m. too. So careful on those two. Those can bring a lot of volatility, as we previously seen. Okay. Okay, so back over here, what are we seeing going on? A little volatile. I don't like stepping into that. If I were to do something, I'd probably just anchor view up to when we started seeing the volatility and seeing how it kind of firms up in and around that area. Okay, so just caught a quick clip. Okay, now I want to join into some of these other larger market cap names, why that's kind of loading up. And if something sets up again, I'll look at it. I'm trying to read some of these things. Sorry, sorry, people. Hate trading Apple. Yeah, Jalen. I don't really day trade it. Swinging trades are kind of whatever to me. I like swing trading it if it sets up. Like anything though. Does TTD look like an inverse head and shoulder on the monthly chart? TTD, I looked at the lower time frame today, and I actually like the look of it. I'm not going to go out into the monthly, but I see what you're saying right now. I see what you're saying, right? Now, typically inverse head and shoulders, like I prefer them on a downtrend, but they're still viable, right? In an uptrend. But this, like, you're talking like Like it's like a 57% pullback on that drawdown. I don't like seeing my inverse head and shoulders, my cup with handles with like that large of a drawdown. You know what I'm saying? I'm more in the realm of 25 to 35% would be extensive on the further dip there. But TDD, you can look at come in here into the right side, yeah, and it is tightening up very nicely. You know, so as far as like setting up for the trade, I think we're setting up there pretty nicely. Oh man, Milo, he's waking up. He's so funny. He rolled onto his stomach and now he's grabbing for his pacifier. He's like this. Now I gotta watch him closely. This little kid, dude. Let me see if my wife's saying anything. I might have to end the stream, unfortunately, because my wife's going to Pilates, has a class, and I have to watch dude, his little hand is just like reaching out like this. It's so cute. Thoughts on TGTX? I don't really got too much thoughts here. Biotech names are always very hard for me because something could come up and change very quickly. But I mean, as it stands right now, you get series of lower highs connected, right? And you get a higher low right here, at least. So maybe a break of this little area could potentially create a little bit of a pop. But the trend is still kind of pulling down. The 200 days pulling down. The 50 is rather neutral to pull slightly down. So, okay. Trader Joe's is saying that NVIDIA had a golden sweep. Yeah, look at NVIDIA. I mean, dude, it's going to be hard for the market to really sell off hard if NVIDIA's, you know, breaking out. Let's take a look here. We got above that swing high there. I want to take a look here quickly at market net flow still. This is turning right back up, people. I mean, I think we can still potentially target up here to 51.90, to be honest. I think it's possible. All right, I got to go get my child. Do you guys want me to leave this stream on so you can watch some of this stuff? Should I do that? Meta. Yeah, I got to go. She's waking up. Yeah, Meta looks good. It's still, you know, consolidating. It's consolidating, putting higher highs, higher lows. Hard to take down. But remember, like a lot of action was traded around this 500. So it's going to be hard to kind of substantially break from that. It could get easily pulled back in. But right now it's consolidating nicely, potentially setting back up for another follow through move. Yeah, okay. I'm gonna go ahead and I gotta go get my child. Let me see here. No, I'm gonna just go like this. And then market net flow I'll put over here. I'll see if let me see if Trader TV works. Let me see if Trader TV works, and I'll put this on just so it has something in the background. Let me ask you, can you hear this? Can you hear that or no? All right, I gotta go get my boy. He's going crazy right now. Ah. Okay, can you hear this or no? You can hear my kid. I know. You don't need sound? Oh, you can't hear this. Oh, man, dude, I don't know what's going on with the Trader TV thing. Yeah, I gotta go. Trader TV. Let me delete that. I'm gonna re-add the source and see if that does it. Can you hear this? No, probably not. All right, I'm gonna just leave it as is. I gotta go take care of my baby, guys. All right. There's no sound on the TV. I gotta fix it later. I gotta have to fix it later.
Marvell and RVL at their presentation saying that they aim for a 20% share of the total data center market after capturing 10% share last year. But Michael, let me. Singapore that U.S. airlines and unions urging the Biden administration to pause approving additional flights to the U.S. by Chinese airlines.
do own the shares on that one. So two different ways to look at the same risk profile setup here, Kevin. Different break-even levels on this. A little bit different risk profiles also on it as far as the amount of money at risk. But you remember, all the risk is to the downside on these type of strategies. So keep that in
Covered
mind.
call has about a 70 delta. Cash secured put about a 39 delta.
39 delta. All right. Good look. Good lesson here on what type of strategy to look at here in Starbucks if you think it's going to rebound, but also limiting maybe some of your upside. All right, let's take a quick break here, Kevin. When we come back, we're going to take a look at Citigroup. The bank stock has risen over 55% so far from those October lows that we saw. This stock was under $39 during those October lows. We're going to take a look at that when Fast Market comes right back.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
All the need-to-know info from every trading day. I'm Renita Young. Earnings, data, the biggest headlines that move the market, all condensed into a few minutes. Download the Schwab Network app and join in on the latest market trends, available anytime, anywhere, on any device, for free. Recap your trading day with the wrap, right here on schwabnetwork.com.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available
All right, y'all. Should be able to hear it now, right?
anywhere on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Cool. I'll be back in a little bit.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Citigroup, let's bring in Ben Lichtenstein, Senior Futures Contributor here on the network. Benny, stocks kind of consolidating. It's been pretty choppy today, but higher yields and a higher dollar not putting any pressure on equities right now.
Yeah, kind of a mixed bag here though, Tom. After the PPI data this morning, kind of appeased some of those concerns that we saw investors expressing yesterday tied to inflation figures. Today, the SPX holding within the range that we established yesterday, so limited in terms of follow through one way or the other. Yesterday, we traded up to 51.78 and down to 51.38. We're kind of hanging out around 51.65, 51.70 there. You can see, for the most part, slightly positive on the day, up about 0.2%. Taking a look at the Dow, they took out yesterday's low while the NASDAQ took out yesterday's high. So again, kind of a mixed bag. And with that, you're not going to see a lot of conviction one way or the other. Follow through NASDAQ down to up to 18,001. So just kind of dialing back some of those losses from yesterday. But yeah, as you mentioned here, yield still holding upper levels. Keep an eye on that 30-year bond auction later today because that's what sent the 10-year to a new high late afternoon yesterday. The dollar holding above 105. So multiple headwinds for stocks. But again, I think at current levels and the fact that we haven't seen a lot of follow through after the selling yesterday should be considered a win for the bulls.
Yeah, that 10-year auction yesterday was dismal, one of the worst on record. So got that 30-year bond auction in about 15 minutes here. So we'll see what happens there if it causes any catalyst for the market. All right, thanks to Ben Lichtenstein, Senior Futures Contributor here, breaking down markets, yields, and the dollar. But now let's bring in Kevin Green, Senior Markets Correspondent here. Kev, we're talking earnings. Financials lead us off. It's been a spectacular run for Citigroup over the last 5 or 6 months here, Kev, as it's bounced off of those October lows. It seems like the new CEO, Jane Fraser, she's cracking the whip across this stock and this company at this point.
She's trying to, and it seems like every earnings announcement that we have coming from Citigroup is the kitchen sink, to say the least. So we are actually expecting to see some declines on a year-over-year basis when it comes to revenue as well as the adjusted earnings per share. But as you're talking about, this restructuring effort has been very, very tough when it comes to this company here. They've been laying off workers. They've been also exiting a lot of markets, a lot of exposure when it comes to the Asia-Pacific markets as well as the South American markets. They're trying to get out of them and really focus on the core and part of their business, which has been lending as well as the retail products. And so that mix is going to be something that they're going to have to transition to. And I think the market's been trying to transition to it as well. And we've had some, pretty notable investors really trying to pick up these shares at lower prices. I believe Berkshire actually got into it at around $33 a share, if I'm not mistaken here. One thing to just kind of note, though, when we're talking about this business, once again, it's kind of transformed its portfolio mix. So they're going to be a little bit more susceptible to the cyclicality of the consumer. And if the consumer is starting to see a little bit of a slowdown in demand when it comes to lending, that could also hurt their business. Or if we do see this rotation out from Citigroup and going into some of these other names when it comes to deposits, that could also hurt their business. But she's really trying to just strip out all of the fat of this company, trying to get back to the core basics of financial lending. And let's see if that's going to be something that's going to pay off here in the near term.
Yeah, it's interesting, Kev. We're comparing JP Morgan to Citi on this show, and there couldn't be more polar opposites. One trades 1.9 book value. Citi trades about a 40% discount to book value. So the question is, Kev, when we look at this name and the changes that they're doing, getting themselves down to 5 core businesses that'll all report to the CEO, is it just enough that they show progress doing that? They've got big between $700 million and $1 billion in severance and headcount reduction. So they're cutting and slashing this company to get it down to a lean, agile company again. Is that enough right now?
It might be, but once again, I think the standards are going to have to be reset when it comes to the business here. And also kind of note, Kev, they're actually getting out of the municipal bond underwriting business as well. Man, that used to be a profitable business around 10 to 15 years ago. Not so much so when it comes to Citibank or Citigroup right now. But yeah, I think there's going to be just a reset across the board. Maybe you compare Citi to more of a PNC style bank rather than a JP Morgan. You're talking about the tangible book. They're trading at around 80 cents to tangible book value. JP Morgan is trading at around $2 per tangible book. That is also very extended for a financial company, if you say the least. That's a pretty healthy premium for any type of financial institution. Usually you do see around $1.10 to maybe $1.20 for the premium for a financial organization, to say the least here. So I think JP Morgan is definitely the outlier. But once again, kind of going back, I just wanted to highlight this. I had the producer get this all set up. Let's also check out a chart. And we're looking at a chart going back to the 90s of where Citi has been and where it's at right now. And just that perspective also does give us a little bit more justice as to trying to reset our expectations. This rapid ramp up because of their lending business and some of the other ancillary businesses that they had. We had the financial crisis, and then we had a whole bunch of reverse splits. And the stock, for the most part, has not really been able to recover. So it's on a comparative basis, on a one-year basis, it's doing really well, but it has not been able to kind of regain a lot of the market share that it's seen in the past. And that's the unfortunate nature when it comes to this business.
Kev, when I look at this company, we've seen the analyst community come out and they're raising the price targets on it every month. I'm looking at the stock, and you just don't see parabolic moves in Citigroup. Is this all down to the fact that, hey, she's tightening the belt around the company, she's laying off workers? In the January update, they said they're going to cut 20,000 jobs in the medium term. I mean, is this the reason? It's almost like a year of efficiency for Citigroup.
Yeah, definitely. And once again, it's trading at a discount compared to its peers. So I think also analysts are looking at the valuations and are thinking that they could actually, re-rate higher because of their peers really outperforming and trading at a very higher tangible book value. I think that's going to be one of the cases. And then two, getting back to that traditional structure, that is something that can be profitable for them because they do have a fair amount of deposits on their books. So if they kind of get out of the frothy type of businesses and just focus on direct lending, focus on the home mortgage side side of the business. I think that's going to be a tailwind for them. But once again, we have to re-rate and reset the expectations. I don't think you compare Citi to a Goldman Sachs, Morgan Stanley, or JP Morgan anymore. You probably should compare Citi to more of a PNC Bank and some of those super regionals. I think that's going to be more of the portfolio mix that they have moving forward.
All right, great breakdown, backdrop for us here, Kev. Appreciate it. That's Kevin Green, Senior Markets Correspondent, breaking down the news on Citigroup. Kev, it's pulled back from those highs that we saw just a couple weeks ago, above $63 a share. Option market's only pricing in about a $2.25 move in the shares. So, like we said, typically we don't see those outsized moves as on a percentage basis that we do in other companies.
Progress might be enough for this company, right? And like I said, the difference between them and JP Morgan is really incredible. Why? Because they're going through massive restructuring.
And JP Morgan's doing well.
And doing extremely well.
Yeah.
So, I mean, there's just a lot of reasons why these two are going in other directions. But if they show progress, getting themselves healthy, could be an opportunity there.
And, just a couple calls that she's had, the new CEO, Jane Fraser, she's not going to come out like, she's going to come out harsh as usual.
Yeah.
The last two, she's like, we're cutting things from overseas. We're getting out of a bunch of different regions.
Yeah, here's what it is. 5 core businesses: services, markets, banking, wealth, and U.S. personal banking. That's all they're going to do. And everyone in that group, in those businesses, reports directly to the CEO.
Yeah.
This is going to be a lean, more agile company.
Yep. So looked at a strategy here, Kev, kind of set up with one of your Starbucks
30-year
trades.
bond
I looked
auction
at a covered
in
call, but
6
a
minutes,
little different
people.
setup, a little
Be aware
bit
of
more
that.
aggressive on my short call. So for every 100 shares of stock you buy, this is really short-term positioning because I'm selling the near-term options in the April 12th cycle. For every 100 shares of stock you buy, you sell one at the money call. And I used the 60 strike call here in Citigroup. And you can see here from the risk profile, it's still a relatively neutral to bullish trade here. But you're paying roughly about a 58.80 debit, trading closer to 58.95 because the stock's moved up a little bit. But if you pay that 58.80 debit, there's your risk all the way down to zero if somehow the stock went down there, $5,880 in risk on it. But Kev, your break even on this one is the debit you pay, $58.80. So you're buying the shares at a discount, but this is really short-term positioning where, hey, even if it goes down, I can still profit on this one, but I got to remain above that break even.
Yeah, you still have downside risk, just like any short put or covered call, but you sold an aggressive call.
2,000
You've got like
megawatts in 4 countries.
$1.35 in premium, and it's like $1 in real premium on this name. So if it sits right here, it does pretty well.
And you could have that ability to roll that short option tomorrow ahead of expiration. If the market's open, liquidity is provided. That'll create credits, maybe extend the position also so you don't get your shares taken away from you. 3.5% dividend yield if it gets paid out. That's pretty hefty there also, but a relatively neutral, slightly bullish look at Citigroup going into those earnings, taking advantage of that higher implied volatility. All right, that's going to do it for us today here on Fast Market, but stick around right here on the Schwab Network. Next Gen Investing's coming up.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Welcome to Schwab Network,
Daily live exclusive content tailored to today's investors.
broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights,
Example trades and stock-specific analysis featuring the smartest minds in the business.
no politics,
No noise.
analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Bond auction results, about to come.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. Alex, a pretty mixed session today, actually, with weakness led by the Dow. But what's amazing to me is actually most of the Mag 7 trade remains intact today, just outside of Meta.
Yeah, this has been a market that has largely been driven by big tech, and it continues to be driven by big tech. NASDAQ way out in front. S&P 500, though, has climbed comfortably into green territory, bringing along with it the Russell as well as the Dow. Actually, the Dow's still teetering, so the Dow's still a little bit lower, but the Russell has crept into green territory. We'll keep our eyes on that. Now, 0.2% for the S&P is comfortably green in the NASDAQ. As you said, the big tech names, the NVIDIAs of the world continue to drive things, and that's been the recipe for basically going back to the end of October, early November of last year.
And how could I forget? We have earnings tomorrow, and we had PPI data this morning, but it felt pretty
Two-year bond
inconsequential after
reopening, when issue
yesterday's
yield
major
at
sell-off
4 is
reaction
about
to CPI.
6.61%.
So we get big banks tomorrow, then we start to see the rest of the major banks kick off early next week. And then the rest of the week we have some odd names, but the main focus is then the following week, I believe, is when we start to see some of these major heavy hitters. So earnings season is among us. We are on the eve of that, as well as it is the Masters kickoff today. So I'm unintentionally wearing green in honor of the Masters. But as always on the show, we'll start things off with upvote and downvote. We'll chart and trade our upvoted names. We'll be looking at FOMO today, Alphabet, which is moving to the upside. It's pretty much near its all-time highs here, as that name has been one of the actually best performers of the Mag 7 this week. So still hanging on to a nice week-to-date gain here. We'll also be looking at the streaming space, as Paramount is the S&P 500's best performer today, which is wild to me, but also still down 7% this week. So some disconnect there. We'll also be looking at Disney with some analyst news. And last but not least, unfortunately, ending on a more sour note, we're looking at Lovesac, the maker of the very pricey couches is what I know it to be true.
And the big beanbag chairs that aren't really beanbags.
Yes, the cool. Those I want one of those things, frankly, but they're expensive, and that name is pacing for one of its worst days in almost 2 years.
There's the 2.47.
Yeah, it's been a rough go at it, but as you said, a really truly discretionary item. We know that there's been kind of outperformers, underperformers within retail. We'll talk more about that under 30. Looking forward to that. Jeff Pierce again with us. So excited to hear his thoughts on that. Looking forward to the Alphabet conversation too. We've talked a lot about NVIDIA lately. We've talked about names like ARM and Microsoft and Apple. Alphabet's quietly flipped the script from earlier on in the year where it was an underperformer. It's now an outperformer. Looking forward to that. Let's do up vote, down vote, though. Not endorsements, not recommendations. And Jenny, speaking of Alphabet, Home Depot and Alphabet partnering up.
They are partnering up. Yeah, so our first story actually involves Alphabet, which is a nice transition here as Home Depot will continue its relationship with Alphabet's Google Cloud to help customers with their home improvement projects. The two companies have collaborated closely, they said, since 2015 to innovate retail technology, whether that's in store or online, or more often the blend of the two. But the multi-year partnership does involve Home Depot now accessing Google Cloud's AI capabilities to enhance its customer experiences. It will also be tapping technologies like machine learning, computer vision, and generative AI to enhance their overall retail management operations and improve supply chain efficiency. So they did highlight, overall, they're one of the first major retailers to migrate their website to the cloud, as Alphabet has been a pretty critical partner as they build this interconnected shopping experience for customers. So I think that's huge. Of course, Home Depot and their overall enhanced search experience is expected to drive more of their online sales, as Home Depot definitely is in need of the upside catalyst. We're pretty much now unchanged. We're up modestly on a year-to-date basis, but this name is also down about 3% this week.
Yeah, it seems the market likes the Alphabet side of this partnership a little bit better than the Home Depot side. It kind of makes sense, right? Alphabet's getting money for this, providing a service. Home Depot's going to be spending the money on that. And so, hey, do you really need AI to go buy some new appliances?
No.
Do you really need AI to go get a new grill or whatever you're going to buy at Home Depot? Just go into the store. Go find it, pick it up. If it's some, little tools or something, or you're a professional, you already know what you need. You don't need AI to help you.
I always feel like those things when you can see your room and visualize, you could basically utilize your current existing room via AI. It's a great tool, but yeah, go.
Is that already there though? Don't we already have that?
We do it. Most websites now, there's the option where you can basically build out your dream room via AI. And without AI, this has been something that's existed to me. But expanding on that, I guess, Home Depot shares are lower today. Now, next name here, we're looking at Amazon, as we did see that CEO Andy Jassy released his shareholder letter earlier today, really highlighting the ways that they're trimming costs while also expanding various areas of growth, namely, and of course, all things AI. Now, AI has been a pillar of strength, they said, in the generative AI revolution. They believe could be the largest tech transformation since the internet. They said this system will give societal and business benefit to all the solutions that will be possible to astound us all. He said that every single one of us at Amazon believes we have a long way to go in every single one of our businesses before they can exhaust the ways they make customers' lives better and easier. And there's also considerable upside in each of the businesses in which they're investing. This is his third shareholder letter since taking over for Jeff Bezos back in 2021, who was at the helm of the company for 27 years. And I think that overall, this letter just points to the optimism we're still seeing in Amazon's AI build. They also had some news today with NVIDIA regarding the Prime Minister of Japan as well as Joe Biden. We're working together to build out AI with the two countries.
That, though, is more of hey, NVIDIA, Amazon, Microsoft, ARM, some Japanese companies, give us some money, let's give it to universities and do some AI. So it's a nice headline. I don't think that's moving anything in this stock. This is a much more reaction to that shareholder letter. And just the fact that, look at this stock chart. This is the kind of name that's been driving the market forward in this concern about yield and where the Fed's going to go. These are the stocks that investors are trusting right now, and they're going back to where, they've made money all over the years.
And I will say that we're right now 25 cents away from all-time highs, which I actually thought we were at all-time highs, and I realized you have to zoom out a little bit because their previous all-time high was back in 2021. So they will then join the bulk of the Mag 7 that have touched all-time highs, at least in 2024, with, I believe, it's Tesla and Apple right now that are still a bit a ways away. But Amazon getting close here, so we'll be watching to see if they are able to take out that new all-time high that would be above $188.65 a share. Now, next name today here is Costco. Another relatively strong performer, very loved by the street. Wells Fargo did reiterate its equal weight rating, saying that March sales numbers were helped by the overall sales in gold. The ties to Costco and gold has been so funny to watch, but they highlighted Costco delivered a robust March quarter once again that demonstrated its share momentum and also highlighted the benefit of its growing precious metals offerings. They mentioned that actually on their previous earnings call, but they said Costco is at this point an excellent company, but the stock has become too expensive. And average rating among analysts is, I mean, $780 a share, so that does imply some upside. High is $905, low is $601 a share, but this name has risen almost 55% on a year-over-year basis.
Yeah, I was just looking through. There's a bunch of analysts, of course, that updated. D.A. Davidson goes to 680, keeps it neutral. Evercore is to 805. They have an outperform. Loop Capital's at 820, but that's down from 830. They also have a buy rating. Roth MKM 650 from 601, but they keep it neutral. So there's a lot of that same feeling, which is no one really wants to be, on the other side of this trade. They don't want to necessarily bet against a name like Costco.
All right, people, I just want to come in really quick. I'm going to be feeding my child here in a moment. 5190, that target that we had discussed. We reached it, baby! Hopefully you guys were able to catch that. I caught a very small piece. Very small piece, unfortunately, because I couldn't pay much attention. 5200 still in striking distance. Market net flow still very positive. So not something that I would say, once again, something that I wouldn't be fading, if you know what I'm saying. But yeah, that was a nice move. Don't get greedy. Be patient. Wait for things to set up.
Here is Macy's.
I'll be back.
The only reason Macy's even caught my attention today is because Macy's is one of the best performers of the S&P 500 this week. It's up 6.5%. Even with today's over 2% move to the downside. I mean, that is ridiculous to me that Macy's has caught this attention, but they're undergoing this proxy fight with a pair of investment firms, which, according to the pension fund that's suing the retailer, is putting their financial future at risk. The takeover defense, which Macy's is threatening to deploy this fight with Arc House Management and Brigade Capital Management, would accelerate the payment of more than $1.5 billion worth of debt, according to this lawsuit. It was filed on Monday. But the defense can force Macy's to speed up their debt repayment if director nominees take over and cause this change of control. And the board is wrongfully accused of disabling the various mechanisms according to these funds. So Arc House has really criticized the way Macy's has responded to the shift in consumer shopping habits, pointing to its slumping revenue as overall it's just been closing stores but not able to do so in a way that's been cost effective or any really benefit to its top line.
I don't have a ton of thoughts on the actual content and the fight or whatever that's going on, but this stuff doesn't go on when the companies are doing great. So it's the same thing that's going on with Disney that we sort of saw resolved. We'll see if this one's resolved.
To cut rates,
I just feel bad for the analysts that have a hard time enough following these companies trying to figure things out. I give them a hard time, but trying to digest this too and figure out what this may mean, I mean, it's a nightmare.
It is a nightmare, and I will say the only thing that really captivated me about Macy's was its recent chart. If you just look at its performance, I mean, really at the beginning of this week, obviously not so much today as we are lower. So we'll be looking more at Macy's from a technical perspective coming up next, as well as some example trades. We'll also be diving into Costco, which is objectively one of the strongest charts really in the staple or discretionary space. So stick around. Next Gen Investing, I'll be right back.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking. the checking account built for investors.
There's no place like the New York Stock Exchange. We've got you covered. The biggest stocks, the biggest trends, all the market moves. The Watch List with me, Nicole Petalides, 2 p.m. Eastern on Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time for our Chart Master segment. So joining him is the Chart Master himself, Rick Ducat, to talk some retail, some discretionary. Also, I believe Costco technically is staple, but still both names are exposed to the consumer fairly well. But Macy's here is still hanging on to a pretty solid week. I know the chart wouldn't tell you that, but it's amazing to me. It's up still over 6% this week.
Big resurgence since we saw earnings in November right here. Around that time, we hit near our 52-week lows right about here. And we are up 87% from that point. Sharp rise to the upside, big gap right here. And this gap was important. This pre-gap level near 1745 proved to be an area where price bottomed out twice. Even though we did make some intraday lows beyond that point, we stabilized and recovered above that point both times. So this is an important bottom to keep an eye on here as we move forward. Now we can see that since we established our most recent low at that 1745 level, we can generate an upward sloping trend line here. We also can see that we had a downward sloping trend line in blue starting with our yearly highs near 2210. That trend line has been broken. We've pushed back above our two shorter term exponential moving averages, yellow 21-day, orange 63-day. We've made our way above those. We bounced around a little bit here within the past couple days, but ultimately it's looking like we have stabilized above that 21-day EMA. So now, if you notice, this little study I wrote here tells us that our 21-day EMA has a slope of 0, so it's flattening out here. That's not really the best sign. We would want to see, oh, it just ticked back up to positive there. So the bulls would want to see the slope making its way up, like a upward trajectory there. That would be a sign of trend continuation here. A negative slope would be a sign of trend change potentially. So keep an eye on that. It can be a good, useful way to, at a glance, quickly tell which way the trend is more biased toward.
So now when we look at, obviously, the trend, which is trying to recover here, and we actually are seeing, I mean, the overall market is starting to ease, I mean, into some not ease, I'd say we're rallying a bit into some areas of strength. Macy's coming off of, obviously, its lows, but momentum, what is that telling you?
Yeah, interesting, kind of unusual read on the RSI here, our measure of momentum, relative strength index. Take a look here. We topped out around the same level over and over again. We did not make really hardly any progress beyond that level, around 60 or so, just above 60. And we had a similar situation, though not as frequent, on the downside here. So around 35 or so, around that level. So we've got a ceiling and a floor on the RSI. And RSI works similar to price. You can draw trend lines, you can draw support and resistance lines. So I would be curious to see if one of those two lines gets breached eventually, what would happen in that situation. But in terms of the overall read on the RSI, we are right on the 50 midline here, not really giving us a clear lean one way or the other here. So kind of a question mark in regard to this study here. I would be really curious to see if we can move to the upside here, reestablish our upward trajectory, and break above the ceiling that we have here. That would be a noteworthy scenario.
Yes, it would. And I mean, this name doesn't have earnings until I believe it's sort of the back half of May. So we do have some time there as far as major catalysts to be concerned with here. So now, as far as some
69
support
counterparties
resistance
taking
levels you're watching, what are you thinking?
$55.4 billion.
Not a lot of clear resistance levels. Perhaps maybe right here, this volume node that maybe could be one to keep an eye on here, but not a lot of clear resistance until we get back to these 52-week highs near 2210. The downside is a little easier. We've got our 21-day EMA. That's kind of the line in the sand to be watching as we head into the close today. We are a little bit above it right now, but that would be a key one to watch out for, especially if we were to close below it and give up that key moving average there. Below that, 63-day EMA comes in near 1921. Then we've got our recent lows near 1829. So lower dollar increments in this one. So the cents are kind of more important in this case here. So that's why I'm being a little more exact.
Yeah, and I mean, when you look at Macy's, it doesn't necessarily have the same volatility or volume as some of the other names we look at. So it is still holding around down 2% here. But I also want to note when we look at trading this name, and even prior to that, is that we did just touch session highs in 3 of the 4 major indices outside of the Dow. So we're rallying here. Something is going on. I can't figure out exactly what it is, but everything's moving to the upside.
Yeah, we'll have to take a look at that. Maybe we can update prior to FOMO and maybe have caused that overall market move. But I looked at a bearish strategy in Macy's. This has just been a name that every time it's recovered at all, it's lost its footing and worked its way back towards lows. Not to say that that's going to happen again, but with that in mind, I did look at a bearish strategy, taking advantage of the more recent up move that you'd seen in the stock. Buying a put vertical, 21.18. You mentioned the late May earnings release, so went to the May expiration to get about a full month out in time. $1.50 on a $3 wide spread would have a 1-to-1 risk reward. Risk 150 to make 150. 1950 is the break even, and that of course is pretty close to where we're currently trading at 1975. So you won't need much of a move to get to that break even point, but you will need a down move towards those more recent lows around 18 to get to max profit.
Fresh record highs.
Yeah, so now to look at another name that is in very much the consumer-facing space, but has performed quite differently. That is Costco. Costco shares here are about $56, we'll call it, off of their highs. But hey, as far as the chart perspective, I know we've pulled back, still has been strong.
$56 off the highs, about 58% up from the lows. So kind of an interesting scenario there here. And really, this is a good example of how earnings can very dramatically rewrite the landscape for price here. Take a look at what was going on before we had our last earnings event. A nice consistent upward channel here, and actually even poking its head up to the upside above that upper line there that was the boundary to the upside. And once again, just taking our trend line, extrapolating it, duplicating it, putting it across the highs can give you a boundary to watch to the upside here. But then earnings came and it reshaped the landscape, so to speak here. And oftentimes when you have a big gap down, some kind of fundamental change, earnings, something like that, it can make sense to start your trend kind of read from that point here. So we have a downward sloping trend line starting from the post-gap highs, connecting to the subsequent highs. Once again, just duplicated it, put it across the lows, matched up pretty well. This is a trick you can use in your trading. It doesn't work every time, of course. Nothing in trading does. Nothing in life does, really, either. But, this is something that happens often enough that it's worth mentioning here. Look at how heavy the volume was, too, during our gap downward here. That shows conviction on the part of traders. It shows there was a lot of energy behind the move here. Now, though, we're above our moving averages. They're trending upward. Maybe perhaps we're righting the ship here once again.
So now when you look at momentum here, what is driving some of the recent price activity with RSI?
Momentum was also pretty interesting in this one here. I was looking at this. I was wondering if perhaps we were seeing some bearish divergence as we were heading into these yearly highs here, but RSI kept making, albeit very modest, it kept making higher highs as price kept making higher closing highs here. So that was a noteworthy situation here. And then once again, we can see that earnings really made things tank there. We kind of fluctuated around that 50 midline on the RSI that separates bullish and bearish momentum. It's looking like we are making our way back above that 50 midline though. So momentum is back in the hands of the bulls here as we are making a small gap up today here that we are dealing with.
So now when you look at some levels here, Costco a bit different because we do somewhat hear their monthly results, so we don't necessarily expect like earnings to be quite the same catalyst. But as far as some near-term support and resistance, what are you watching?
Well, once again, we have the 21-day EMA that's a factor today. We touched on that one. That was about where we hit the lows of today. That would be a key area to watch here. Also, lines up pretty closely with a volume node here. When I say a volume node, I mean a spike in trading volume at a specific price level. That's what our volume profile study reveals here, this blue bar graph on the right side of the screen. This green line, 712, was a point where we hit some highs and then lows, bottomed out there again. It was a point where we dipped a little bit below but recovered here, so I think it could still be worth keeping an eye on. It's also quite close to our 63-day EMA near 709. To the upside, perhaps this upper boundary of our downward sloping channel, and then right here we had a gap down that we hit the highs near about 755 or so would be an area to watch there.
755. Okay, a lot to look at here with Costco shares. Like you said, off of lows by well over 55% here, even though we are in a nice 1.3% rally today. We have seen some degree of slowdown after hitting peaks earlier this year. But now in trading this name, walk us through your thinking here, Alex.
Yeah, we talked about the analysts not necessarily being bearish on the stock, but kind of losing their bullish kind of posture on it as it got more and more expensive. Along those lines, Rick kind of walked through that more recent downward sloping channel. So we looked at a neutral to bearish strategy, not necessarily thinking the stock's going to go significantly lower, but maybe just runs into a bit of a ceiling over the next month as it tries to recover. With that in mind, the exact strikes we looked at were that final level that Rick talked about, 755. Went to the May expiration, no earnings until the end of May. 760 strike to define the risk. So again, selling the 755, 760 call vertical for $1.25. That would be 1/4 the width of the strikes. Creates a 3-to-1. So you have a 375 max loss. Max profit is 125. 756.25 would be the break even. Stay below 755. You can keep that max profit at expiration. If it does break through, it is risk defined, of course, but there is some technical levels that this is leaning on, hoping that they hold. So neutral to bearish, Jenny. Of course, you wouldn't do this if you were more optimistic on Costco. Just looking at sort of that message from the analyst, as well as the more recent tactical trend being a little bit more sour.
Yeah, absolutely. And a name that has been so resilient given the fact that it is still very much exposed to inflation and the various price increases and so many of the things that seemed to weigh on markets yesterday that aren't bothering markets, obviously, today. But we will leave it there for our Chart Master segment. Coming up next, it's time for FOMO. We're talking all things Alphabet as it did take out another new all-time high today and what is driving the growth of all of the cloud aspects of its business. We'll talk more about that coming up next.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Down Download the Schwab Network app and join in on the latest market trends. Anytime,
reads saying UK
anywhere,
wage growth
on
is still
any
far
device
too
for
high.
free. Schwab Network.
Welcome back to Next Gen Investing. It's time for FOMO, but real quick, we're going to take a look at the overall markets. As Jenny pointed out in the last segment, we are on session highs or thereabouts. S&P's up about 33 points, NASDAQ up 225. The lowly Russell 2000 up 13, and the Dow Jones. It is green now. I said it was green earlier. It wasn't quite green. Now it is comfortably green, up 30 points as well. So, Jenny, kind of a slew of different things came out in the last 30 minutes. So take them for what they are. Apple did announce a overhaul of their Mac line. We're going to have more on that in about 10 minutes or so for a developing story. We do have a Bank of England, I think it's Megan Green is speaking as well, although it seems kind of hawkish from the stuff I'm seeing there. There was a 30-year Treasury auction I think that there was some worries about. That seemed to have gone off okay, not seeing a bunch of movement in the 30-year bonds. And then kind of a joke here, but also seeing it on the headlines, Taylor Swift reinstating her music on TikTok. I mean, Jenny, I thought that might be something that you were interested in. I know you're not on TikTok, but this always, we know the Swift effect has been big on markets, so something to mention. I'm going to say the Apple move, Amazon making a new all-time high, feeding onto what was already a pretty bullish market is probably our catalyst, but we'll find out more in a bit. Let's do FOMO now. Alphabet's another name that's been very, very strong, up 1.65%. Basically, big tech is just taking the market, put it on its back once again, and saved the show.
No kidding, because now, when mentioned we were lower, I believe it was Meta earlier in the session here. Now we are green across the board as far as the Mag 7 is concerned. A rare day when even Tesla and Apple are higher here. I know Apple has some news, but when looking at Alphabet, they have been one of the strongest names on the week. We're now up 4% week to date. That's not too shabby considering it hasn't been a straight shot to the upside in the overall markets in tech this week. But they did kick off their annual Google Cloud Next conference this past Tuesday and really used this conference to gather more than 30,000 visionaries and they said the world's industry leaders to make explicit declarations that Google Cloud is placing generative AI at the center of its offerings with the aim to revolutionize its business operations. So they showed that really their ambition for enterprise AI products goes beyond streamlining tasks, as their CEO did put. And these AI advancements enable enterprises to do things today that just weren't possible before. The AI announcements really showed that they are trying to rival the powerhouses being OpenAI and Microsoft, as well as overall the AI-empowered tools that are revolved around B2B enterprises. Google did ramp up its competitive efforts against Microsoft in this AI arms race. They've been seen, I believe, in at least my opinion and my coverage, as the second place to Microsoft in the large language models, but they're trying ever so difficultly to try to recapture that market share. But overall, they've expanded on their Gemini offerings and their advancements into AI. We do hear from them in the beginning of I believe it's April 24th is when we get Alphabet's earnings. So that is also something to keep on our radar, or 23rd, excuse me. We hear from them the same day as Microsoft. But unfortunately for Alphabet, they report consistently on the same day, same time as Microsoft, and they've always played second fiddle. I mean, it feels like even though they report really strong ad growth and they'll report really strong data center improvements, it seems like it's just never enough, at least comparatively to Microsoft, and then shares always fall, but they've still been growing at a really healthy pace.
Yeah, that's been sort of the recent trend, no doubt. And we know Microsoft's kind of move is to put the numbers out, see what happens in that first like an hour or so, and then they come out with their guidance during the press conference piece to it, or the the conference call. But when I look at Alphabet, I see a lot of green, up on a day, up on a week, up on a month, up on 3 months, 6 months, 12 months, 3 years. This is a strong uptrend that's been reestablished after a pretty lackluster start to the year. So Alphabet finally getting some momentum. There was that chatter, Jenny, if you remember, probably about a month ago now, where Apple and Alphabet were going to team up for the AI momentarily. And I don't even know if that was ever confirmed, but just the chatter of that like completely changed the thought around how Alphabet's AI offering was perceived. Now we're hearing about partnerships for Home Depot and others. So it seems like Alphabet and Google and its AI have finally started to get a little bit more of a firm footing. and it's allowed for this stock to retake its kind of throne as an outperformer.
And it is also part of this. I know we discussed this story a bit earlier on this show today, but it's also part of this build out or build with, I should say, with Japan, as they did announce they'll be investing about $1 billion in digital connectivity to Japan to support their Japan digitization initiative and improve their overall digital connectivity between the U.S., Japan, and other Pacific islands. We did also hear this is really funding the expansion of what is being called Google's Pacific Connective Initiative. It covers Australia, French Polynesia, and the addition of also these various entities in Japan to expand its fiber optics. So this is another win for Alphabet. It seems like these companies have been really building their cash position for this very moment, because all of them, I mean, they are spending to build.
No doubt. Mark Mahaney at Evercore, tactical outperform list, views earnings as a short-term risk-reward, as a positive and as an attractive risk-reward setup. So that was another thing that really stuck out to me, Jenny, when you look at this stock and how well it's been performing. Because it had that little pocket of underperformance, it's actually as if, it's still got room to go, where so many of these other names, way past, I mean, how many, times over has NVIDIA made an all-time high? Microsoft seemingly hasn't had one step backwards in the better part of 2 years. And now Apple certainly has, and Alphabet certainly has, but it's like with that backwards movement that we saw earlier in the year, it's only allowed for optimism when it's come back to only grow. Volatility levels are starting to peak up here ahead of earnings, so that's another thing that I'm focused on, Jenny, but not entirely uncommon, as we know that earnings, particularly for Alphabet, have been volatile.
They have, and I think, it's just like the ill timing in which they always have to follow in Microsoft's footsteps, which is unfortunate for them, but at least they are some of the few that kick it off, because then later that week we hear from more of these massive names. So it gets busy once we start April 23rd on for these major tech names. Also, I think it's important to note that there was all of this negativity around some of the federal sort of speculation and litigation facing these companies. I mean, you can't even tell from a chart. That's always what seems to happen. I'm not discounting the sort of undermining the importance of antitrust concerns, but they have been facing scrutiny from not only us here in the U.S. as far as regulators are concerned, but also UK regulators have also been fairly critical of their dominance, mostly in terms of search, as Alphabet's Google does command a vast majority of the overall search, not only here in the U.S., but also in the world. And that has been an area of concern. However, it never seems like it actually even matters. It's like we talk about this for a few days.
This is a great point, right? Because this is the risk you can see for all of these companies, right? It's like, hey, they've gotten really big. They're really, really powerful, maybe too powerful in some cases. Their market positions are, borderline monopolies in some cases. And there's a lot of political rhetoric around it. It's heated at times. But it does seem, at times, and it has been at least, that it's a lot more talk than real action against these companies. I know there's been a lot that's come out of Europe, but it really doesn't seem to derail the rallies. It doesn't really seem to do more than some headline surprise risk from time to time. So with that, the FOMO feeling, Jenny, has to be to the upside on this stock at the moment. There's very few things that are working against it in terms of technicals, fundamentals. We talked about the regulatory risk, but until something meaningful happens, I don't think that that's a real risk that investors take serious, rightly or wrongly. What I looked at was buying a call calendar above the market April 26th, May 3rd. So we're selling the week of earnings. We're buying the following week. So this is establishing an earnings trade ahead of that earnings event happening by a little bit of a wide margin. So, you would maybe do this if you think the stock may run up into earnings. And with that, I looked at the 167.5 call calendar. That would be about $10 above where we're currently trading, $9 now in real time. For a 50-cent debit, that would be $50 in risk. So this is a way to take a speculative position on an upside move, Jenny, but reduce and control that risk as much as possible by reducing that debit down to 50 cents. Look, it's got $50 in risk, but we've talked about trades at times that have thousands of dollars of risk. So on the spectrum of more or less notional risk that we talk about, I would say that objectively this is on the lower side, but that doesn't always mean that it's a high probability trade. I would say that this one has a chance where there's a scenario and where maybe it doesn't make any money at all and it goes to full loss, but you know that full loss going in. It's very customizable, so wherever that strike selection is going to be paramount. You're really wanting to select a strike that you think is realistic for this stock to get to and be at throughout the duration of the trade. So in this case, the 167.5 call is the strike selected, but that's just one way to look at it. Jenny, $50 in risk, looking for an upside move.
Yeah, looking for that upside move and looking for this strength to continue here. As I know we are no longer at peaks, but market's still looking pretty healthy, I will say, on a daily basis. But we will leave it there for FOMO. Now, coming up next, we'll be talking more about that Apple story. News we just got regarding overall that they're intending to overhaul their Mac line and what that means for their AI-focused chips, the M4s. Renita Young will have more on that story. We'll also be talking more of the streaming space, Disney, Paramount with Kevin Green coming up next.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Every morning, our analysis is your blueprint for the day. Bonds, stocks across all asset classes on Morning Trade Live on the Schwab Network. Weekdays at 9 a.m. Eastern.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Power your portfolio with the Schwab Network. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time to look at a developing story. We're talking all things Apple with some Mac news. And here to break that down for us is Renita Young, Senior Markets Correspondent for the network. And Renita, I have to say, I wanted to look at the intraday chart because since we got this news, I mean, about, say, like at this point, 30 minutes ago, we saw shares rise $2. So based on then the shares we see, that added about roughly $31 billion.
Yeah.
So that was a $31 billion headline, we could call it. It's amazing.
Absolutely, and it's all about the next generation of processors. And it's a report circulating from Bloomberg that Apple is going to overhaul its entire Mac line with its new M4 chips that'll be coming out. Now, this is going to bring AI capabilities and memory improvements, and it'll come in at least 3 main varieties, according to that report. And it'll include iMacs, low-end 14 MacBook Pro, the high-end 14 and 16-inch MacBook Pros and Mac Minis to begin with. And then the 13-inch and 15-inch MacBook Air will come in by the spring of next year. The Mac Studio and Mac Pro will all release. So the release will go from the beginning, it'll begin late this year to early next year and then go throughout next year as well. Now, this comes just 5 months after Mac released, or after Apple released its M3 chips. Remember that huge event that they had in October? I watched it live and it was pretty interesting, but it's also at a very serious time for Macs in general because, as we talked about on this show before, sales peaked for MacBook Pros, or all of the Mac line, in 2022, and then they fell around 27% in the last fiscal year that ended in September. And holiday revenue from computers was flat, and Apple has created that M3 Focus launched event last year to try to reinvigorate that Mac business. But it's almost like now they got to go back in and do it again because we have all these companies coming out with their next generation processors. A lot of them we heard about this week. And also, those M3s were not enough of an improvement over the M2s that Apple had as well. So this new chip is actually part of this broader push Apple has to blend AI capabilities into all of its products.
Yeah, and I'm hearing this will start to we'll see these chips unveiled in these new Macs in 2024, maybe and beginning of 2025. But this is huge because we've been saying we need a catalyst in Apple. We need something to excite investors again. Thank goodness. And as we can see, I mean, shares are now in a nice 1.8% gain this week. But we needed Macs to do something because I feel like as far as some of these other major components of their business outside of iPhones go, it's been so quiet.
Absolutely, I couldn't agree more. And you're right, this is the catalyst that they needed. And so we'll find out any more confirmation of this because it is still a very developing story.
It is a great breakdown on that, Renita, and I think Apple, as always, is still important, even though we've seen a pullback. It's one of the largest companies in the world, so it's always important to see when things move $30 billion in shares in just a matter of like 40 minutes. But we'll leave it there. Great breakdown, Renita Young, Senior Markets Correspondent for the network. Now I'd like to bring in Kevin Green, who's here to discuss all things these streamers. And we'll start off with Disney, which is actually higher now in the session, albeit slightly, but we were lower earlier. We have some analyst news, but what is happening at Disney, Kevin?
Yeah, we are seeing JP Morgan actually reinstating their coverage on Disney and actually raising their price target up from $120 up to $140 here. Now, they actually do kind of caution against the media landscape as a whole, but they do believe that Disney is favored because of their product suite that they have or the content portfolio that they have, as well as their ability to really cut costs and try to streamline their businesses. And then what they're also doing with the ESPN business here, they do believe that there's going to be a lot of opportunity with the joint ventures that they have in play. And so once again, we're kind of seeing a lot of optimism going towards Disney as the price continues to advance higher. And I kind of agree with them in a couple of respects here regarding the content. It's very unique. Their sports franchise continues to grow, and they are looking at other avenues in order to distribute their content as well. So I think overall, we are seeing once again a little bit of a bullish note when it comes to JP Morgan, and also looking at the ability of being able to, consider and maintain price levels where they're at right now.
Kevin, when we talk Disney, we always talk the streaming, we always talk the content. I get it's the growth engine, but the bread and butter of this company is the IP, it's the infrastructure, it's the parks, it's the experiences that these brands and characters bring to all the fans. Has that been enough? I guess the stock price tells us no, but has that been enough to offset the streaming woes?
I think so. I mean, at the end of the day, when you're looking at this COVID low that we had, I mean, obviously their parks business took a major hit, and what they were able to do is actually increase their prices. And even though we are now fully reopened, those prices did not abate. So they were able to expand their margins in that business, and that actually kind of padded them a little bit from some of the woes that we've seen from the streaming business. Now, we also had that structure issue last year where we had the writer strike that also kind of postponed some of the initial cap spending for content, and now that's kind of pulling it forward. But once again, when you're looking at the sports franchise, you're looking at the ESPN business.
What's up, everybody?
Direct to consumer.
Gonna do a quick update here on some gamma levels.
TV, because I think that's kind of what you're highlighting. It does appear that they are trying to go towards every single avenue to get their content out there and leveraging some of their peers
some of these gamma levers
to try to maximize profitability as well. I think it's a pretty decent strategy. I think the street is starting to appreciate it a little bit more here.
5,200, 5190, 5190. Holy macaronis!
But similar in the aspect that it has a streaming business that is Paramount, which amazingly enough is the best performer in the S&P 500 today. So I wanted to also mention that. I mean, its volume is ridiculous. I mean, what has been going on with Paramount this week?
It seems like every day there's talks about mergers, and then you have the ability to pull out of mergers as well. So it does appear that there are continued talks that are going around mergers, and right now it does appear that they're going to be exiting the Skydance merger talks at this point in time.
All right, we're right there, about 5,200 people.
As well.
It's going to be kind of hard to escape, but I mean, if we get some escape velocity, 5250, but our gamma flip line is 5230. Not too far, not too far away from our flip line. But we're breaking above the resistance level that we kind of identified earlier in the trading session on this candle right here.
Significant amount. I wouldn't call it a significant, but sometimes we have these like breakup fees if they stop merger talks and things of that nature. But once again, a lot of chatter, a lot of rumors around this name and their content suite. I think they're trying to find the right person in order to be able to try to synthesize the deal and try to find a
BP did not progress
Yes,
beyond
yes.
preliminary discussion.
I'm still on break right now. I'm still watching my child until my wife gets here. We're sitting at around highs of the day, both SPY and NQ.
What matters is they're not dominating at all. I mean, they're underperforming the streaming market, which we were looking at Netflix yesterday, saying that there's like
market net flow has been telling us all day, don't be trying to short this. Don't fight the trend. It's been a green convergence all day. We saw a nice big spread throughout this period. We tried to go long multiple times. We said this was the target. We came into the target. Doesn't mean it can't go higher than this. Still, we have bullish convergence. It's waning a little bit, and we're at this big gamma level here. So getting kind of stuck around 5,200 makes sense to me. So I think the trade has been made. I think you got to be a little bit more cautious now. Be a little bit more aggressive if you're trying to trade it to the long side.
See this battle back and forth when it comes to content and trying to be able to.
All right, yeah, I'm gonna take another break here. Or I'm gonna just I can't be I gotta watch my child still. Pull this back up. That was just a quick little update, and I'll tune in. I'll go over some names too individually, probably within the next 20 or something like that. 15, 20 minutes, somewhere around there. My wife should be back.
North America, which is something they probably did not bank on. So I'm right there with you. There's a lot of competitors, but we probably will continue to see a lot of consolidation in this space. And those that are going to be profitable and show that they have strength on their balance sheet, those are probably the ones that are going to continue to remain. And then other ones, like we were talking about with Paramount, maybe we continue to hear about potential mergers that are out there. Even though they're not doing great, they still have a content portfolio that some people do appreciate. And so that does come with a value. We just have to figure out what that value is right now.
Yeah, absolutely, Kevin. And I think that has been what's so difficult is like, how do we reevaluate this company if it has different ownership? But still, hey, making a nice move to the upside today, best performer in the S&P, so definitely worth mentioning. And Disney now higher also alongside the overall market strength. But appreciate the all things media breakdown. Kevin Green, senior markets correspondent for the network. Now coming up next, it's time for Under 30. We are looking at Lovesac, which unfortunately is not catching a bid today after some more dismal results from the company. Shares are down at this point about 12.25%. So we're off of session lows, but we'll discuss more about why we're seeing this major day to the downside with Jeff Pierce coming up next.
I was born on the south side of Chicago. It has been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
The Globe Life as it bounces off the lows. Still down 43% call.
Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Welcome back to Next Gen Investing. Time for Under 30. Today we discuss Lovesac post-earnings. Bring in Jeff Pierce, Senior Manager of Derivatives Trading at Charles Schwab & Co. for some insights. Hard to paint this with a positive brush. It's down 12%. Basically every time frame that I look at, other than a 6-month time frame, because it is off its lows marginally here, Jeff, is a red one. What did we learn from their financial results?
Yeah, unfortunately, we learned that investors' concerns about the demand here for furniture and some of the competition is really playing out in the report. We see earnings per share came in missed at $1.87 versus $1.93 expected. Revenue missed as well, $250.5 million versus the $265.3 expected. That was up just 5% year over year. And on the outlook side, for Q1, they expect revenue between $126 and $132 million. Analysts were looking for over $147 million. At the midpoint of $129 million, that would be an 8.6% year-over-year decline. Earnings per share wasn't much better for Q1 expectations, 84 cents to a $1.03 loss. Analysts were looking for a loss of around 15 cents. And for the full year, revenue expected between $700 and $770 million. Analysts were looking for around $765. Earnings per share of $1.06 to $1.59. Analysts were looking for $2.15. So well below on all analyst expectations for this quarter, this coming quarter's outlook. And we're seeing that play out today with about 12.5% decline on the stock.
So Jeff, one of my favorite aspects about Lovesac, because we've talked about this name a few times, is that the most, if you just search like their most high-end couch, as far as I can see, if you get this 10-seated, 12-side, I mean, the thing is massive. It has like an ottoman. It costs almost $22,000. I mean, for a couch. And the thing is huge. I mean, it's probably bigger than my entire apartment, but are these items just too high-end that right now with, I mean, everything else costing more, you're probably not shelling out maybe $20,000 for a couch?
Yeah, I think that's certainly part of it, right? Interest rates, some of the economic uncertainty we have out there has been putting pressure on consumer discretionary spending. Of course, that CPI data, pushed back some potential for rate cuts earlier. But competition is on the rise as well. We're seeing more online options. We're seeing consumers more willing to go online for furniture purchases. That was something that typically kind of had a moat around it before. Lovesac, of course, is online, but their model is largely supported by that in-store shopping. And to your point, although they offer a very unique style of furniture, being adjustable, washable, so on and so forth, that is something we're seeing more companies come out with, and sometimes at a better price point. This company may be a little bit better suited for that in-person shopping. They've got 230 showrooms. They've got places at Costco, Best Buy. But those headlines are showing up in the report. Last 2 years, revenue growth has been about 18.6%. That's below their 5-year trend. And that Q1 revenue expectation of about an 8.6% decline, that's a far cry from the 9% increase we saw in their last Q1 report.
Jeff, I'm looking at this too. So you bring up the slowing growth or just the decelerating revenue, which is a concern on its own. But with that, it's like their margins have fallen off a cliff as well. The forward guidance for first quarter, the earnings per share are abysmal versus where the expectation was, swinging to a loss of 84 cents to 103. The estimate was for 15 cents. EPS for the whole year is now down 106 to 159, not let alone the fact that that's a super wide margin, but the expectation was 218. This is just like a worse story that's getting much worse.
Yeah, absolutely. And, it's disappointing because I think investors were seeing some positivity in Q3 when they saw revenue up 14%. They saw them narrow their loss substantially down to $2.3 million from $7.4 million. So there was some optimism there. We've seen their customer accounts continue to rise, albeit not at a rate nearly as much as what we were seeing in 2019 through 2022, but they're still on the rise nonetheless. These expectations are not high.
again, the pressure on the consumer mixed with the competition out there, I think is really pushing on this company. And to your point earlier, the cost certainly has to play a role. These are expensive items.
I cannot get over it, Jeff. I am now doing like some bad research because now I'm actually curious about these bean bags that we were joking about. I mean, they're $1,000 bean bags. It's ridiculous. So even though I can respect the product, I mean that is a crazy high price tag even for myself, which I do tend to overspend. But appreciate the insight as always. Unfortunately, on Lovesac shares, which are down 12.4% on this session, but that'll do it for Next Gen Investing for this Thursday. Don't forget to download the Schwab Network app and tune in 24/7 on schwabnetwork.com. The watch list is coming up next.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
U.S. equity markets creeping up to the highs of the afternoon here. The Dow up 55 points at 51.98. The S&P cash up 37 handles.
Anytime, anywhere, any device for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network. Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange. We have a big show for you. I think the first thing to note is that you see the Dow has moved into positive territory. It was down for the fourth day, but has turned around since earlier today. And even the S&P right now up 0.75%. What will the day bring? We are looking at big bank earnings. Those will kick off tomorrow. We'll get you prepared for JP Morgan, Wells Fargo, Citigroup, as they all prepare to report in the morning. Central bank activity is in focus. The ECB kept rates unchanged this morning. We'll discuss that impact and what the Fed may be watching. Our panel standing by to discuss Constellation Brands, those earnings, and we saw the beer sector carry them to promising results. In the meantime, here's a look at the markets. As I noted, turnaround here finally. We have digested this morning's PPI, which came in a little lighter than expected. And you do see a turnaround after a couple of days of selling for sure. The S&P 5197, the NASDAQ is up 1.3%. The Dow Jones Industrial Average up 0.1%. Had it been down, I was going to say fourth down day, but turned around here. Russell 2000 up more than 0.5%. So you look at oil and gold. Oil is pulling back, 85.08 the barrel, 23.73 a troy ounce for gold. U.S. dollar has been relatively strong when you see it above 105 there, and Bitcoin futures 70,650. That's up 1/3 of 1%. For some of the biggest stories in the markets, we welcome in Kevin Hanks, Senior Equities Contributor at Schwab Network. And we are seeing a partnership. They're partnering up Amazon and NVIDIA. Tell us more about that.
Chinese government enlisting Amazon and NVIDIA to fund a new joint AI research program. NVIDIA, Amazon, ARM Holdings, Microsoft, along with Japanese companies providing $110 million for AI research between the University of Washington in Seattle and Tsukuba University in Tokyo, as well as Carnegie Mellon University in Pittsburgh and Tokyo's Keio University. So a group of companies getting together to fund AI research between the U.S. and Japan. Pretty exciting. All the stocks involved here, NVIDIA, Amazon, Microsoft, all higher on the day, Nicole, based on this and, well, macroeconomic issues as well. So strong day for all these stocks and good news in terms of AI.
All right. And then we take a look at those banks because we kick off earnings season in earnest here. Tell us about what you're watching.
Yeah, the wait for first quarter earnings season is now here, Nicole. We start tomorrow morning with the three big banks, JP Morgan, Wells Fargo, and Citigroup. Now, it's a story of two different extremes here. When you look at JP Morgan, they're looking for $4.18 on earnings per share on revenue of $40.75 billion. Citigroup, $1.10 cents per share, earnings per share on revenue of $20.3 billion. Now, here's the thing. JP Morgan has a book value of about 1.9, where Citigroup has a book value of about 40% discount to book value. So two stocks with two different stories as Citigroup goes through a major restructuring. Now, we also get Wells Fargo. They're looking for $1.09 a share on revenue of $20.17 billion as well. So there's the estimates, but a big story on the valuation of JP Morgan and the discounted valuation of Citigroup. We'll watch for those results tomorrow morning for sure, Nicole.
Yeah, looking forward to it all. Kevin Hanks, thank you so much. Now let's take a look at the bigger picture. Octavio Morenzi is with us, CEO at Opimos. Thank you for being here. So the ECB holds pat. I mean, folks are still expecting the ECB to cut in June. The Fed, on the other hand, is likely to cut maybe later in the year, if that, because our inflation prints have been somewhat sticky. You tell me, what are your thoughts here, Octavio?
Well, this cut of the interest rates in the US, it seems to be receding further and further into the future. I mean, at the end of last year, it really looked like it was an absolute certainty that by March or May, at the very, very latest, we'd see some significant cuts. That hasn't come, even though people thought it was 100% sure that it would. So the Fed is in a bind. Basically, all the real indicators that would allow it to cut rates are not there. The stock market is near or at record highs. Gold is really high. Bitcoin is high. Unemployment is low. The economy is growing well. Inflation is basically, core inflation is twice where the Fed would like it to be. All those things indicate that the Fed would be actually better off increasing interest rates rather than cutting them. All those macroeconomic indicators point in the other direction. They don't point towards a rate cut, but a rate increase. Now, I know we've had people come out and say from the Fed that they still expect to see rate cuts this year, but that is going further and further into the future. We're seeing this recede. I think, if anything, the Fed is going to actually have to increase rates before it cuts them, and that's going to catch the market off guard. And there's so much of this rate cut is already baked into the prices that we're seeing. If it doesn't come into fruition, there's going to be some big disappointments in the markets, and we'll see a bit of a correction, I think.
Michelle Baumann has actually said that maybe an increase is needed, right? You're not surprised to hear you have at least one person on the Federal Open Market Committee who is thinking, I believe that she's actually on the committee, I'm not 100% sure, but while Bostic is saying, one cut, so we will see. In the meantime, what else are you watching? Have you seen the surge in gold to new highs, Bitcoin on your radar?
Well, listen, I'm watching gold very intently, and Bitcoin as well, though Bitcoin is not really a kind of thing that we look at that much. So try and keep away from that as much as possible. However, with gold, it's really interesting. I think we've seen gold really fly higher on the back of some very, very serious geopolitical concerns. The war in Ukraine looks like it might be going into some new direction, with the Russians getting a bit more aggressive there. The Middle East looks really bad. I mean, there's a lot of really bad things going on geopolitically. And so I think gold has benefited from that tremendously. And there's been just a flow of money into gold, basically to hedge against those macroeconomic geopolitical risks.
We're watching the banks. Jamie Dimon, do you actually think he may run for president? I see something to the thought of that in the notes. You're watching these banks. Tell me some thoughts there.
Well, let's talk about Jamie Dimon first of all. I don't know if you read his shareholder letter that he publishes every year. It's always very insightful, always very interesting. I thought this year was a bit weird in the sense that he was talking basically about America's leadership role and the need to rally the Western alliance together. And it didn't look like a letter from a bank CEO to his shareholders, but much rather looked like a political manifesto or someone getting ready to run for some sort of political office. And I don't know what that might be. He's a bit late for the presidential race, but maybe he's aiming at something else. I'm not sure. I guess he's 68 years old now, so he's starting to get a bit old to be a CEO of a major bank. He's been running JP Morgan for 20 years now, but he's still very young to be president. I mean, maybe he has to wait another 10 years to catch up with Joe Biden and with Donald Trump in terms of age. Maybe his 68 is just too young. But so he seems to be angling for something. It doesn't look like he's thinking that much about the future in terms of CEO of a bank, but much rather looking for something political to do, I think. And who knows what that might be. I suspect he would aim at the very top. He wouldn't go for some sort of minor position overall. But in terms of the banks, I expect JP Morgan in particular to do really well tomorrow. We've seen a bunch of equities analysts basically think that the banks are going to set aside a lot of reserves now for credit losses with the anticipation of the economy weakening and unemployment going up, and therefore they're going to see some delinquencies or high delinquencies on their loan portfolios. I think that's going to be probably off the mark. As I mentioned before, we've seen unemployment remain very low. We've seen the economy continue to grow, and those are the major two factors that banks look at and consider when they're trying to forecast what their credit losses are going to be in the future. So those two indicators are looking very, very good indeed. So for someone like JP Morgan, that's positive. I don't think there's a big need for them to reserve more and set aside more for credit losses. And a whole bunch of their other businesses are doing really well. If we look at the investment banking side, we're starting to see some life in basically deal making, mergers and acquisitions, IPOs, and equity issuance has gone up to much higher levels than we've seen in a couple of years now. There's true on the fixed income side too. We've seen some activity, nice activity on the M&A side. And on the trading side, fixed income and equities trading, we're seeing very high volumes of trading there. And that's always good for banks like JP Morgan in their market-making activities in terms of commissions that they receive there as well. So these things all look really positive, I think, certainly for JP Morgan. For Wells Fargo, it's a bit different because Wells Fargo has a much, much bigger exposure to the mortgage sector, and that is sort of contracting. So we see these very high mortgage rates, and now they're up above 7% again. That's not good for mortgage origination, and so I expect Wells Fargo to suffer a bit as a result of that. And Citibank is kind of the wild card. I mean, the Citibank stock
Logic,
price
HOLX, and Bear delivering a collaboration for contrast enhanced mammography.
Basically, on the promises that CEO Jane Fraser has made in terms of restructuring the bank. Now, we haven't seen that flow through to the bottom line yet.
Morgan Stanley MS reported their wealth unit being probed by federal regulators. Michael Sierra.
Going to drag their earnings down. But we haven't seen the impact yet of that, and we're going to have to start to see that fairly soon. It's been starting to get close to the 9-month mark in terms of her restructuring efforts.
We're saying
I
that
think the market's
multiple
basically going to give her
federal
about a year.
regulators
We're
are
going to want to see some
investigating
solid results
the
on the
wealth
bottom line as a
management
result
unit
of
at
all the
Morgan
work that she's
Stanley.
doing in terms of reorganizing the bank. But we haven't seen it yet.
The probe is aimed at vetting of clients and money laundering risk.
Particularly on the JP Morgan, because you really delved into that. And JP Morgan, most of the guests that I have on often pick JP Morgan out of the banks as the one that they like, the one that they feel is set up best. You also talked some about Wells Fargo and Citi. Which banks do you think are positioned best? What's your advice to investors? Would you be buying some of these stocks here?
Well, I think those banks that have a bigger exposure in terms of the capital markets, in particular Goldman Sachs and Morgan Stanley, should do quite well this quarter. So certainly in terms of earnings. Now, does that get fully reflected in the stock price, or has the market already anticipated that? That's difficult to say. I mean, we were talking earlier about Citi and compared to JP Morgan in terms of its book value ratio. Certainly true that Citibank looks, or Citigroup, sorry, it looks kind of cheap in comparison. But it's very misleading to rely on book value for these banks because they really don't mark that much to market in terms of the book value of the things that they're holding. So it's not a terribly insightful figure to look at. So I'd be very, very cautious about doing that. I think someone like Citibank, where the stock has been on a tear over the course of the past 6 months and done phenomenally well, I think investors should be quite cautious there. We're going to have to wait and see for some real results to come in there. So I think JP Morgan looks good, Goldman Sachs, Morgan Stanley, I think those three for me stand out.
Well, the Morgan Stanley report saying that the Office of the Comptroller of the Currency
All right.
and other Treasury
Jeez,
Department
man. I missed out on such a good move today. Caught some of it, but
does not do as well.
dad duty.
So that's sort of
Session
I'm
lows
back.
here on these headlines, down more than 2.5%.
What's down 2.5%? This market is ripping, people. Market net flow. This is what we talk about as far as like a great indicator. A great tool. Like if you're trying to fade this, this would be the reason why you do. Where is my other? There it is. All right, let me set this back up. Let me do this. Let me do this. Let me get y'all set back up. Hey, there we go. Okay. We're coming back. We're live. All right, ladies and gentlemen. People are shorting Apple. Are you talking about people are trying to actually short Apple right now? Heck, man. That's crazy. I mean, I get it if you want to do a quick fade trade, but holy macaronis. Apple has been a market mover. What do I mean by that? Look at Meta. Meta is actually like this. Somebody had me pull this up a little bit earlier. But nice little contraction pattern here in Meta. The market's moving, man. The market is going. The market is cranking. We're back within the 1 minute opening range there in Meta. Let me pull up Apple. Apple, I absolutely freaking nailed it. I'm so like, I gotta be more happy about the wins. Like this trade, nailed. I'm so happy about that. Nailed it. I'm still in it. Look at that. You don't believe me? I mean, if you're not in the Discord, you probably didn't see that. And no, that's not like a pitch to sell it. Like I said, it's not an alert service. But take a look here. This is what was posted. I talked about it earlier, actually. I'll show it if you're just still here. Chances are, if you're still here, you're awesome. Just saying. Just a quick observation. All right, so this was the post, and you know, it's like I said, it's not an alert service. It's just showing you all it is that I'm doing there. And I do this on my lives, by the way. If you don't got $9 a month, don't worry about it, or pay the year. I do this on the lives. I do this on my stock market team. I just give some extra stuff, and I give it a forward ahead of time, more stuff. You get some more tools like the trading ticks, bot suite, and all that stuff. Besides the point, this was like, look how tight Apple was contracting here. The volume was contracting. We saw positive divergences forming. It was coming into prior support. And the main key here was I'm watching for a break of today's high to see if it can lead to a pop, which means the break of that prior high.
Israeli strike in Damascus.
Break of this high, boom, to see a pop. Like if your stop was here or if it was there, that right there is a huge freaking win. And more importantly, this is what I mean by contraction leads to expansion. Price got tight, offered up a small risk, you back into the risk, and it gives you, boom, a nice reward. So even if I got stopped out, that'd be one thing, one hit, right? I go to the next trade and eventually I get a catch one. Look at DIY. Look at this monster. I've since now trimmed my position roughly, not quite at 5, but roughly right around there, like in this range. Trimmed it up dramatically. But I tried trading this from here. I got stopped out, I think over here for like a break-even move. I tried trading it here, and then I got like whipped out, I think over here. I can't really remember. I tried 2 or 3 times, and then finally I was just like, all right, if we get back up here, we see some strength, I'm entering, and bam, wah. That was a big breakout, and look at the volume on that breakout. This to me looks like it can keep going, but I'd say pay attention to the consolidation. Hey, John, appreciate it. James, welcome. Still here? Nice. See, you guys are the cool ones. I jumped in big, 5% position for me on what trade? Apple? At Peasy? ST key hands. Oh, you shorted Apple at 171. Where's Apple at? Did you just manage the risk and get out of it? Darren, you have your TV at 100% and can barely hear it. Hear what, me? Talking? You should hear me. You should be able to hear me pretty good. Right now, at least. Let's take a look at the Twitch chat. Full rippy risk on theme. Trader Joe's here. XLK, XLY, XLC. Yeah, let's take a look at the S&P 500 sectors. Shacuse. So yeah, let me see the top winners right here. Yeah, XLK, which means the Qs is up there, up almost 2% on the day. XLC, we got SPY up there, obviously. IWM's okay.
Copper markets, Chilean state company, copper company, Cochoco saying they expect Escondida February.
Yeah, it's a risk on move for sure.
Up on a year-over-year basis.
MS getting killed. What's MS? Shoot. Yeah, be careful here. I mean, like I said, you don't want to, we said it over here. We said it over here. You don't short. Okay. What is going on here? You don't want to short when you see this in market net flow. You're literally fighting against dealers. Right? So if you're trading stocks within the S&P 500, right, or the S&P 500 or the Qs, be careful. Be careful. We talked about this in the last couple of streams. We said we will get a trend day. We will get it, and it will be very obvious when this thing really works. And this thing has been working. I mean, I'd say it really started kicking in, feeling really noticeable here, right? A little bit later. And then we got chopped, right? We got chopped. It went sideways. But the market net flow never changed. It kept on draining out here, cumulative net premiums, and these kept on rising. Even into the bond auction, that's what the case was. It's like, who cares about the bond auction? Good, bad, it doesn't matter. This is what dealers were doing. It's wild. It's wild. Now, let's be real. Let's be real here. Dude, is Apple still freaking going? Dude, come on now. Come on. Up 3.61% on the day. All right, I got to log into my account actually because I did take some profits, but I'm pretty blown away by today's move. Actually, if it closes at the high, around the high, there's a high likelihood you get follow through. There's a high likelihood you get follow through to a higher high, and it's going to be so tomorrow. It's probably going to be a higher high, higher low, even if it comes off a little bit. A lot of times you get these big candles and you just trade inside the next day. And that could be a period of consolidation, and the consolidation could set up again. But sometimes Apple just goes. Sometimes it just goes boom, 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 boom. And then people chase it up, and then it comes down and consolidates, and then they get wiped out. Or they wait, be patient, and get lucky. Who knows? So on the big down day on Thursday, I think it was, my portfolio took its hit. Obviously, I think most did because it was a full-blown correlate. Was it Thursday or was No, CPI day. Yeah, CPI, maybe it was CPI day just yesterday. My portfolio got a hit, right? It hit, right? Because I'm long only. But it was like 50-50 basically. I was looking for more exposure. but I wasn't really too aggressively adding given the context of where we were as far as market conditions go. So I got hit hard. Today made that back for sure with the Apple trade. Pretty pumped about that. Pretty pumped. Let me see here. Yeah. Yeah, dude. Yeah, dude. Okay. Yeah, I traded AAPU, by the way. So it's up 7% today. Oh, John, you did the same thing. Yeah, I did the same thing. I literally traded AAPU. Yep. I totally forgot about this position. STNG, I still have that. It is basically break even. It's a little down actually. I forgot about that one. SDRL, so oil's down today. I would imagine oil stocks, right? Because I saw energy. So I'd imagine oil's down on the day. Okay, yeah. But it's also could be setting up. So this is what happens. This is what happens in these times. People start to look, oh, the market's coming back. It's going to be because it's a big day. So people focus there. And then the names that have been doing good pull back. And you should be keeping an eye on everything. Like, yeah, you can get follow through in these markets. Like, right? So look at SPY. Look at SPY. Really, it hasn't gone anywhere for a while. It's going sideways. You can say that it's kind of wedging here, right? Or flagging. But really, it hasn't negated this bearish outside trading day. It didn't really confirm it. We never closed below it, but we did cross below it. So even if it comes up here and then gets hit again, I mean, that's just consolidation after this big distribution day right there. Okay. We're outside of the daily expected move right now for the S&P 500. Back above the 5-day moving average. It is declining, so it's bearish with caution. And we are below the gamma flip line. So remember, the gamma flip line, you can get your face ripped off, right? You can get selling into selling, buying into buying, selling into selling, buying. This is exactly what I mean by that. Crazy, right? But we're still there in negative gamma territory. We are still under 5250. Okay? So yeah, it's exciting to see a little bit of a day up, but dude, don't get it twisted. Don't get it twisted. Like, this is volatility. Let's take a look at the VIX. Let's see how far the VIX came off. See if anything kind of shows up there. VIX came off, but I mean, it's still at 15. You look back to the left of the screen, it's still relatively high comparatively, I guess, but it came off strong today. The dollar coming off, but the dollar hit a new high for the year today, and the dollar hasn't really backed off at all there. So yeah, like you're getting a little fade trade in some energy names, but this is just going sideways. And remember, maybe I should pull up that chart, but if energy outperforms the S&P 500 from a relative basis, that's not actually good for the stock market. I can prove it. I'll show you. By the way, FDX is looking more and more like a good setup for the Holy Grail. I'll show you. Take a look at FDX. Somebody clip this once I talk about FDX. I'm gonna talk it like this because I'll probably end up posting it. Watch when it takes off. Actually, it don't matter. I'll just re-edit the screen. Okay, so this is FDX Industrial. Now, nothing's guaranteed in this business, but FDX, you can't tell me that this isn't just like a beautiful wedge after a very strong move. You get a strong gap up, prices consolidating, volumes drying up. Look at the
Southern NSC. They're disclosing some changes to some intermodal agreements between CPKC and Kansas City Southern Railway Company.
ADX is rising, or it's above 30 still. So when that's the case, this is a holy grail setup. So what do? How do you trade this? You put a buy stop order in on the prior day, right? Buy stop order, and today's an inside trading day. If it breaks the high of the prior trading day, then you get your entry, And then you put a stop right there and you play it up to the swing high. Okay. A lot of times these fail. A lot of times they pay out, but this is the risk. This could be the reward. And that's just to say, if it trades up to here, right? If you can manage your risk as time goes, but that's the current risk, right? If the move went up here and then pulled back and then started going like that, you can potentially move your risk up, right? It just depends on how you trade it. And you might not want to get out here. You might think that it's going higher. So you may take partial profits or whatever. But right now, I mean, that's a pretty clear, wedge. Boom, in bullish context. It breaks down, get out, breaks up, good stuff. I'll tell you what, I'll enter in right now. Here, let me pull up FDX. I'll just take a trade. Okay, I'm not gonna take a big trade, but I'll take a trade live. Let me pull up FDX. Where's FDX? All right, I'm gonna pull it up on here and just give an idea of what it looks like here. I wanna see a little bit smaller time frame. So it's an inside trading day today, so this thing could get, it's a pretty strong move up already, and it's but low decline. I wanna give it a little bit more time. Should I just go for it and just say whatever? I'll just go. I'll just say whatever. I'll just factor that into the position size. I had a little position, but I got out the other day, so I'll just re-enter. YOLO. I'll take a little position. How about that? Let me see. Let me do a quick calculation here. So why am I taking a smaller position? Why am I not confident? Okay, I'll tell you why. Before I enter. First, I got to be bullish, but with caution, right? 5-day moving average is still declining, but price is above it. That's a positive sign. Where are we as far as negative gamma? We're in negative gamma territory. We're seeing some strength come into that. So this is normal price action, but it would be normal if it came right back down too as well. Okay. If we go into positive gamma territory, I like that look. So I'm factoring that in. And then on top of that, I'm factoring in the point that it hasn't broken out and it hasn't hit a buy stop order. So I could put a buy stop order in right now, but I may forget, to be honest. It's like I might not be watching it tomorrow. Or if I put in a buy stop order, maybe it gaps through it and over it. I like to do that during the day. I don't think it's going to break that during today. I don't think FDX is going to come in, I don't think that we're going to break the high here today. I don't think it's going to 274 today. Maybe. I feel like it could do this, and then maybe take off from that point. But one thing's certain: if I enter in, I'll just have a stop right here. So roughly I'll lose about like a 2%. Okay. I'm gonna do a small position, people. I'm gonna do a 3% position just because of the factors that are going in. Typically I can start at like 5, 6, 7 and then work itself up to maybe 10. I'm gonna just mitigate it because of the market conditions, just so I have some exposure there. But it's gonna be a small position. Wait, what's going on? There it goes. Okay, there you go. Small position there in FDX. See where it filled. Cool, it filled.
We're coming to the close of pit trading in energy markets. WTI crude drifting towards the lows of the day, down just shy of 1.5% at 84.91. 86.91 in WTI crude.
Okay, so I like that chart. I like the SPX or FDX chart. It looks clean. SMCI, you want me to take a look at SMCI? I'll take a look at SMCI. I was watching this contraction. It's kind of a dirty looking contraction pattern, but it nonetheless was, and then it broke out. Looks like it's coming back for a back test. I'd be watching like this trend line down here. Probably like that, That's what I'd be watching. So it comes up, maybe comes back down, it comes up, down, and then, then potentially breaks out. But I mean, it's in rising context. You have a low, a higher low, a higher low. You do have a low, you have a high, a lower high, and a lower high. So I'd like to see that and then take that out. And then it puts in a higher low again, and then maybe takes off. That to me would be a little bit better scenario. I mean, I can see why people might just play right here, play early entry, and then have a stop under there. Thank you. What? I need help opening it. Dude, I thought my wife was bringing me a drink, and she looks at me. I say thank you, and she's like, "No, I just needed help opening it."
Do you want me to
Get out of here, dude! I can hardly open this thing. I'll take one, please.
Do you want blueberry pomegranate or peach mango?
Either, I don't care. Whatever one you dislike. Too funny, man. Too funny. Keith, I'm not calculating the gamma levels. I source that data from Gamma Labs. There are various companies that you can source data. There's Mentor, Q, or whatever it's called. There's Tier 1 Alpha. There's Gamma Labs. There's a lot. TradeEtix. I use TradeEtix. I use Gamma Labs. I became familiar with them. I like them. They respond when I write to them, you know. So, or you can make your own and source the data, create an API, and do all that stuff. But hey, I'm not that smart. If anybody wants to do that for me, hey, let's build out a platform together. We'll do it. But I ain't no coder. Thank you, baby. Oh, you were shorting SMCI. Okay, gotcha. I am. Well, congratulations if you caught the short. I'm gonna take a look at 0-date levels really quick, just to give an idea if anything's really changed. If nothing's really changed, if traders aren't reaching out further, which they're not, it seems likely to pull back into 5200, 5190. They're kind of reaching out to 5230. That is the gamma flip line, but not much, but not by much. So if it comes back in, it could hold potentially this area as a level of support. But you can see here, that 5230 is being reached for, but look at 5190. Look at 5200. And where are we? We are at 5214. We're right in this pocket. We're right in this pocket. Okay, kind of stuck between the two. So I feel like it might magnet more this way. But you look at market net flow, you add in another element. And market net flow is just straight bullish. Take a look over here at 0-date GEX. 518 for SPY. That is the current magnet on the recent change. So even that would say, hey, I can maybe pull back into the daily expected move. Remember, there's a higher probability we close within here. But on these trend days, and watch out. Watch out. Like I said, knowing that, I wouldn't short it back in because of the trend right now in the market net flow. And you look at, like, you have this candle, a smaller candle, a smaller candle. This thing looks like it's coiling up for another run almost. So, yeah, I say don't get too greedy. Don't if you're trading right now tactically, okay, but be careful there. Look for various setups that might be setting up for a move. But yeah, that would be my take here. It looks like it wants to strike that. I mean, shoot, it does. It looks like that, but we shall see. We shall see. Oh, Ruben? You want to contact me for something? Wait, let me go back and look at the chat. I might have missed something. Oh, you know how to code? You know how to, like, do all that API stuff or source the data and I don't even know the first step to any of that stuff or how to
send message to Washington